Putin announces a partial mobilization, escalating the Ukraine war. He vows to use all means necessary to defend Russia and pledges to annex occupied territories. Moments of truth. The Fed is expected to hike by 75 basis points for a third straight meeting. Muriel Rubini, aka Dr. Doom, sees a long and ugly recession. Plus, nationalisation. Germany will buy Fortum's majority stake in gas giant Uniper for €1.70 a share.
Tom, with just a few seconds to go until the open, futures turning very swiftly as soon as we got those headlines of Putin announcing more mobilization between central banks. It's hard to imagine anyone wants to take risk right now.
Yes, setting up for a pretty grim day on his equity markets after the S&P knocked off 10% from those August highs yesterday. Of course, European equities ended lower as well on Tuesday, leading up, of course, to that announcement from the Federal Reserve that 75 basis points is what is expected. Then, of course, Thursday, the BOE. We're going to focus on what's happening in the UK, particularly on Friday. But it is the geopolitics, and it's Russia and Vladimir Putin with this rare public address pushing his way to the front of the agenda and leading to the further risk-off moves that we've seen. Bonds bid, equities lower, and, of course, the dollar strengthened once again. The Spanish IBEX down by 0.9%. Over in France, losses of 50 points. And here in the UK, the FTSE 100 down 0.3%, as Liz Truss, the UK Prime Minister, says she is prepared to be unpopular as we look ahead to those tax cut measures potentially outlined on Friday. Let's switch it over, see how things are playing out cross assets there. We look ahead to the future stateside, of course, and again with the Fed centrally in focus. Down 0.3% on the S&P futures, just building on the losses we've seen this week. Euro dollar back below, well below parity now at 98. Look at that, the pressure on the single currency coming through, down 0.7%, and certainly Vladimir Putin has a role to play in that. The dollar is strengthening. US 2 years, 3.94, coming off that 4% level that we got to yesterday. Bonds bids across the curve this morning in this risk-off move. And gold as well, I wanted to highlight for you, it's been underloved, the yellow metal, but getting a bid this morning, and they go back again to those geopolitical risks, up 0.4%. Danny.
Tom, it's really hard-pressed right now to find any sector that is in the green. It is negativity. We're down about 0.5% on the stock 600 at the open here. You're finding a few of it in those safe haven type sectors. Telcos, for example, that's solidly in the green. Staples, another one. Again, this is a sector that if you are concerned, you'd want to flee to. Staples is perhaps where you go. But overall, it is down, 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 whether you're worried about central banks, some of the more rate-sensitive type assets. So that impacting, you can see, for example, tech, for example, that is struggling. At the same time, you're looking at utilities. Of course, this is going to be in focus with Germany buying the rest of the stake from Uniper. We were expecting perhaps some gains from Fortum, but perhaps that's not enough to overcome some of the negativity in this market. Again, it's remarkable. Even healthcare, a safety sector, is not doing well. So it's war concerns, and it's also the Fed. Let's get more into that, what impact it would have, not on equities necessarily, but on yields. Let's get over to our MLive managing editor, Mark Cudmore, who has a look at that. Mark.
Yes, good morning, Danny. I just wanted to provide a little bit of a bigger perspective going into the Fed tonight. This is a look at 10-year yields in the US, white line, in the UK, red line, and in Germany, purple line, over the last 30 years. And you can see that generally they move roughly in tandem with quite a big spread. In fact, the average spread between US Treasuries and German 10-year yields over the last 33 years, which is as long as the data goes on Bloomberg, is 65 basis points. Today, it's around 165 basis points. So the spread is about 100 basis points wider than normal. So if we do get an upward shock in US 10-year yields today, that's looking difficult in the wake of the Putin news, well, then expect European yields might be the way that actually play on the back of this, which just makes the point that it's not just about the Fed and the other central banks. Even the ECB is not moving. They're really going to be driven around by the price action we get today. Now, one other point to draw attention to is to add the second chart here, which is adding the Japanese 10-year yields to this. So one of the dynamics here is that we've been in a really long-term bull market for bonds. That's yields lower. That has been the big theme of the last 30, 40 years. We started reversing over the last year or so. Maybe this is the end of the bond bull market. We could see the bond bear market. That means yields potentially going much higher. If they do, and I think maybe the ultimate moment of that cycle will be the end of yield curve control from the BOJ. The BOJ also decide tomorrow. They're not expected to remove it tomorrow, but I think the chance of them removing it over the next few months is much greater than people think. In fact, maybe Japanese yields should start becoming more anchored with the rest of these as well. And maybe if you think this yields move continue, it's the one in Japan that you should really watching for the big catch-up trade over the next 6 months.
Okay, the Mark Cardmore called that the BOJ will be forced to walk back from its yield curve control in the months ahead. Thank you. Looking at the yield story for us ahead of the Fed, of course, MLive's managing editor, Mark Cardmore. Let's get back to the big geopolitical story of the moment then. Russian President Vladimir Putin has signed an order for partial military mobilization beginning today. In a televised address to the nation, Putin said that he supports referendums in Russian-occupied Ukraine on annexation, and that Russia will take necessary steps to defend its territory. For more, we are joined by Bloomberg's Europe correspondent, Maria Tadeo. Maria, what more did the Russian president say?
Well, Tom, overall, this is a message that confirms that the Russian army does need additional manpower to what is now a very messy front line in Ukraine. If you look at the numbers that have been presented now by Russian authorities, they believe they can bring in an additional 300,000 men to the front line in Ukraine. These are men who are in the reserve of the Russian army who had already military experience before this and could now be called in to join in the battle. Now, the other thing here is Vladimir Putin once again saying if these referendums go ahead and these regions now enter the Russian Federation and become part of Russia, that he will defend his territory by all means, and repeating, this is not a bluff. This is not a joke. Now, overall, Tom, I think that when you look at this on the bigger picture, if you thought there was a diplomatic resolution to this on the medium term, I think today, after this, you can really kiss it goodbye. It is a major escalation in tone, but also in form. The other thing to watch out for is the Ukrainian response. We know that President Zelensky has said he's not going to accept it, and Ukraine will continue the counteroffensive. And then, of course, is the Western reaction, whether more sanctions could be to come, but also how does the West potentially prepare to a major escalation from the Russians going into this?
Well, yeah, Maria, to that point, I mean, what can the rest of the world do? What can Europe, the U.S. do if, as you say, diplomacy is out the window?
Well, diplomacy, they were hoping that there could be some way out of this over the medium term. After today, that is very complicated. And if anything, it's just very difficult to see how there's a diplomatic mean out of this. So that we can rule it out for the time being. I would keep a very close eye on the United States and President Biden today. Of course, every major Western leader is in New York for the General Assembly. Yesterday, we heard from the French President Emmanuel Macron. He had a speech that to me was very powerful, in which he argued we're now seeing an imperialistic war from Russia in Ukraine, and we have to be very clear-eyed about this. There will not be peace in Europe until the sovereignty of Ukraine is guaranteed, its safety protected, and its territories are liberated. So overall, when you look at this on the bigger picture, Danny, I think that we can say, A, this feels a lot like February, and today is a day of escalation in this war.
Okay, Maria, thank you very much. Bloomberg's Maria Tadeo there. And Tom, of course, as all part of this of trying to secure energy security in Europe, we heard from Germany, they're going to be nationalizing Uniper, buying the rest from Ford. Of course, we're looking at some of these moves, a 20% rise for Fordham today.
Yeah, and on the flip side, of course, the Finnish owner, previously the Finnish owner, and on the flip side, of course, Uniper lower by around 18%. So a few more details on this historic move by officials in Berlin. They're going to be injecting a further 8 billion euros as part of this move to buy the majority stake from Fortum. On the back of this, again, Uniper, for the context, the largest gas exporter in Germany at looking at 1.7 euros a share is the plan to buy all of this from the Finnish parent company, of course, on the back of trying to secure, as Danny, you were saying, those energy supplies heading into winter.
Yeah, it's certainly a market now scrambling, trying to figure out what the impact of a prolonged and escalated war will mean. Let's get into that. Joining us now is Charlotte Ryland, co-head of investments at CCLA Investment Management, as well as Christine Aquino from our markets team. And Charlotte, look, I look at what the environment has been from the war. You finally have gas levels, gasoline coming back down to pre-war levels. The commodity rally had taken a breather. Does all of this change now when it's clear that the war isn't over, supply chains are still at risk?
I mean, I don't think there was many people who were genuinely expecting this not to drag on and on and on, that Putin was going to sort of step back and say, you know, it didn't work out as I wanted, I'm not going to bother anymore. So I think the idea that, you know, it's going to continue being very difficult, that Europe is, you know, even if Putin had stopped, was Europe going to, you know, renew dependence on Russian gas? I suspect not. So that shock to the gas markets has already happened. In terms of the oil markets, well, we know it's still flowing out to China, it's still flowing out to India, so that Russian production is still going. So I think it just adds to that uncertainty, but I don't think that initial shock that we had obviously back in February, I don't think this is going to be as bad as that.
Charlotte, I guess that the reaction from some geopolitical analysts today would be that this is not an example of the war going on and on and on. This is raising the tempo quite significantly from Vladimir Putin, talking again about their nuclear stockpile and threatening the use of that around what would be considered by the Kremlin at least additional Russian territory. So what is the risk premium around that kind of event?
Yeah, I mean, I suppose he has mentioned nuclear before, and we obviously think that that's, you know, one would hope that that's not going to be a route that he goes down. But clearly, if he does, you know, that's pretty catastrophic, not only for Russia itself, because I'm sure there'll be fallout there, but, you know, equally for the world. So let's hope that that's not where he gets to, and that he's clearly reacting to, you know, the gains that Ukraine had made in the last few weeks, and, you know, pushing back. So we will see how it goes.
Christine, let me bring you into the conversation, because looking at the reaction in this currency market, a euro that is getting dangerously close to its low for the year, currently at 9.898. The low, of course, was at 9.864. Does this just continue to fuel that move into the greenback?
Well, Danny, I think it really does. And, you know, again, if there is any asset in Europe that really shows just how much Europe is suffering from this prolonged energy crisis and the escalation in a Russia-Ukraine war, it is the currency, is very much the report card for the situation that Europe is in right now. And it is very telling that we are seeing, again, that downward pressure. A lot of analysts are already saying that it could go well past that parity mark, which it already has, and well down to around the 90 level. And, you know, at this point, I think we're probably going to start seeing some reevaluation of even the most bearish views on the euro because of this escalation. And again, the other side of that, of course, is dollar strength, which is being fueled again by expectations for what the Fed is going to be doing. That's also an important part of the equation, and could be something that adds to more pressure in the euro overnight once we hear from Fed policymakers.
Charlotte, let's bring you back in at this point. Your expectation, presumably 75 basis points from the Fed. What do you expect the market reaction to be? Would there be a sigh of relief at this point, given the speculation around 100 basis points a little under a week ago?
I mean, I think it's probably going to also depend what they say about, you know, beyond this rate hike, because I think the 75, as you say, is pretty much expected. So if they say, and actually we're going to be having to sustain it for a considerable period of time, that's obviously going to be more bearish than if they're going to hint towards, you know, more softening in the future. But I suspect they're going to be looking back to, you know, the past and saying, well, actually, you know, we need to raise rates and we need to keep them up then in order to actually kill this inflation, which is certainly not dead yet.
You know, we're getting some lines right now, Charlotte, from ECB Guindos, who's saying, you know, war remains a key risk, economy likely to stagnate around year end, monetary policy must walk a fine line. Does this sound to you that the ECB, Christine Lagarde yesterday talking about that they're still going to continue hiking rates, does this sound to you like an ECB that can continue to do it if, again, as Guindos says, the economy is likely to stagnate?
Yeah, I mean, I think this is the conundrum that, you know, we've had in the UK as well, is that, you know, you need to get the inflation under control, and that will have a sort of very serious economic impact. And I suppose the difficulty with Europe as well, of course, is you have, you know, different economies moving at different speeds. And so, you know, the periphery has always been historically, you know, the thing that people worried about when you begin to move up rates. So will that come back into play? Quite possibly.
Okay, Charlotte, thank you very much indeed. Charlotte Ryan is staying with us. We'll get more analysis from Charlotte Ryland in the minutes ahead after the break. Talking of those peripherals, currently 4.15 on Italian 10-year debt, yields off by 3 basis points, but that's the trend across bond markets, sovereign debt this morning in this risk-off move. And Christina Kino, of course, from our MLive team, thank you for walking us through some of the key themes and looking ahead to the Fed. Coming up, we're going to continue, of course, that coverage ahead of the Federal Reserve's rate decision. Of course, the commentary from Jay Powell, the dot plots, and the consequences for market volatility. We'll get the analysis next. That is coming up. This is Bloomberg.
I've always been a person who's just been attracted to hair. I like to sit and think and theorize how I can manifest these visions that I have for braiding and how I can take something that may seem like it's a line drawing in my mind and apply that to someone's scalp.
We are the only culture that has hair that grows out of our head the way that it does. Anyone from the African diaspora is born with this amazingly curly hair that can be shaped into a variety of different ways of expression.
I want Black people to love themselves for how they naturally appear, and also to appreciate the cultural practices such as braiding that our ancestors have practiced for centuries.
Welcome back to the Open. About 16 minutes into your European trading day, most indices turning lower with fears around escalating war risk in Ukraine, with Putin saying that they're going to do further mobilization. We are looking at energy, one of the best performing sectors in the Stock 600 today, given that oil prices are climbing higher by 3%. Elsewhere, it's the DAX, CAC Iran moving lower. Some of those both interest rate sensitive sectors as well as cyclical sectors really under pain today. Now, all of that has to do in part with Jay Powell later today. All eyes turn to him, with traders expecting another jumbo rate hike from the central bank. 75 basis points is expected, but a 100 basis point move, that can't be ruled out as part of a global effort to stamp out inflation. Charlotte Ryland, co-head of investments at CCLA Investment Management, is still with us. Charlotte, I know that you've been moving more into cash. You still have that overweight position. Are there any strong convictions you would be willing to hold going into this Fed rate decision?
You know, I think for us, you know, the cash sitting there, at least you are yielding something on it now, particularly if you look at some of the short duration instruments. But, you know, I think from the point of view of the equity market, you know, there are signs of some quite interesting value coming through in some of the names. You know, and if you can take a longer-term perspective and look through that, then I think that's not a bad place to be. But clearly, you need to be pretty cautious on anything that's got a lot of leverage in it, or anything that's going to be, you know, really suffering from those cost pressures and can't pass it through.
Without having to press you to name names, talk to us about the sectors where that value is coming through then.
Yeah, so I mean, I think for us, we're still seeing value within some of the healthcare names. So, they're where we're still getting continued growth. I think within technology, you've seen a lot of sort of the big names really pull back an awfully long way. And so, again, that would be somewhere you begin to start looking at, but clearly making sure that you're not sort of wading into something which has had, that pandemic boost and where that's beginning to fade off. So, some of the advertising-related names, Alphabet, for example, potentially could be quite vulnerable in this environment if advertising slows.
So our reporter, Michelle Jamrisco, I got to say, sent me the best email ever. It was basically, here's what's on deck for tomorrow, Tom. I don't know if you're ready for this, but she said, BOJ, Taiwan, Philippines, Indonesia, Switzerland, Norway, South Africa, Egypt, BOE, Turkey, all of them have rate decisions tomorrow. I mean, yes, we have the Fed today, but that's potential volatility coming into this market. And part of the way it's manifested is liquidity just being sapped, especially in things like treasuries. Charlotte, in this environment, is the market functioning as normal?
Well, I think, we've got a big question mark about what happens as we begin quantitative tightening, and that's beginning now, and how actually that's going to impact on things, because we don't have a sort of market, we don't have a historical experience of what happens when that happens. And then clearly, it's how much confidence people have within the market. I mean, I think the retail investors have continued to buy the dip, but do they carry on doing that? And do we actually see some of that liquidity begin to flow back out? And that's going to be, pretty difficult for the whole market.
And we've had earnings warnings, of course, from FedEx, Ford, and others. Yes. Is that the next shoe to drop?
I think that's the expectation, is that as we move into the second half of the year, you've got the cost pressures, you've got interest rates moving up. That always has a delayed impact, but it will have a real impact. And you've seen that initially with some of the retailers. They were the big profit warnings, back before the summer. Now people like FedEx. So, you would expect those warnings to begin to come through. And that's certainly, people have been talking about, there's considerable downside on the earnings numbers still.
Okay, Charlotte Ryling, co-head of investments at CCLA Investment Management. Thank you. Staying defensive, still some opportunities within value. Got to do your homework, though. Charlotte, thank you. Coming up, a big day ahead for the new UK Prime Minister, Liz Truss. She's set to meet President Biden and address world leaders at the United Nations. More on that next. This is Bloomberg.
In the past 2 decades, China has built large infrastructure projects in almost every country in Africa.
African governments themselves said, we are tired of aid and charity. We want to do trade. We want to be treated like partners. The Chinese came along and said, great, we don't do aid and charity. We want to do business with you.
Global Gateway will mobilize 300 billion euros till 2027.
Now the US and Europe are answering back with their own infrastructure initiatives to counter China. But African experts are skeptical.
China has been that guy around the corner with, a bouquet of flowers to Africa, the US, Europe and the UK have time and time again said, be careful of the flowers you see out of the window. They have thorns on them.
No one covers the world like Bloomberg.
We have to get interest rates higher and bring inflation back to our target.
33 million people have been affected by this flooding in the monsoon.
Disruption is the whole point of a strike.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
Welcome back to the Open. Happy Wednesday. 22 minutes into your European trading day. Losses of a little over 0.1% across your benchmark. The geopolitics of Russia stepping up and upping the ante in Ukraine, combined, of course, with concerns about central bank action as the Fed takes the stage later today with an expected 75 basis point hike. You're seeing the future stateside S&P IMI's down 0.2%, but a little bit of a turnaround in sentiment here in Europe. A couple of sectors still clinging onto the green, particularly energy up 1.8%. And the UK, the FTSE 100, just about holding on in the green, just up a little under 0.1%. Talking of the UK, Liz Truss is on her first foreign trip since becoming the Prime Minister. She is scheduled to meet with US President Joe Biden before addressing world leaders at the UN General Assembly. For more on this, we're joined by Bloomberg's Lizzie Burden. Lizzie, the Prime Minister on a trip, of course, to New York, her first in that role. What are we expecting to see from her?
Well, even before we see her speaking to Joe Biden, we've seen her courting controversy with remarks to the broadcasters. She's admitted that her tax cut plans are going to hit they're going to benefit the richest initially, even if she hopes that they'll boost growth in the long term. So in this mini budget that we're expecting on Friday, we're expecting a cancellation of the planned rise in corporation tax. The Times of London this morning reporting that she's going to cut stamp duty, the property transaction tax, and we're expecting Kwasi Kwarteng to lift the cap on bankers' bonuses. So Joe Biden made comments saying that he doesn't agree with trickle-down economics, but Truss's team has said they weren't directed at her. Nonetheless, she says that she doesn't mind being unpopular and making the difficult decisions as long as it makes the economy grow.
So more spending, scrapping tax rises, of course. The logical follow-on is, can the UK government afford this?
Well, we've just had the public borrowing figures out from the Office for National Statistics this morning, and they showed that public borrowing was twice as high as was expected in May, and that's because of the higher interest rates pushing up borrowing costs. We've also had concerns about the bill from the Treasury Select Committee Chairman, Mel Stride. He wrote to Kwasi Kwarteng, the Chancellor, urging him to allow the fiscal watchdog, the Office for Budget Responsibility, to do its sums on how much all of this is going to cost. Truss's team says there isn't time, but the OBR insists that it can at least do some initial sums before this mini-budget on Friday.
Yeah, so she's at loggerheads with Joe Biden over economic policies and at loggerheads over trade as well, admitting that the UK is not going to be getting a trade deal with the United States, something that Brexiteers had long touted as one of the benefits. Thinking of the US-UK relationship, Fed, BOE, we got that decision on Thursday. What are we expecting in terms of the play across from the Fed decision later today and how that influences?
Yeah, big debate over how much the Fed influences the Bank of England. Markets are now expecting 75 basis points from the BOE, but economists see 50, and that's because they think that the short-term inflation impact in the UK will be softened because of Truss's energy bailout. Now, it's not just the interest rate decision that we'll be getting, it's also the inflation forecast. Be interesting to see whether that has reduced from the 13% peak that the BOE saw before the Truss energy bailout. But also the big question is the BOE going to put the brakes on active quantitative tightening? Given all these tax cuts, bailouts, it's surely going to necessitate more borrowing. And if the BOE cracks on with the active gilt sales now, it's going to be pulling in opposite directions.
All right, Lizzie, thank you very much. Bloomberg's Lizzie Burden there. And Tom, yeah, look, I'm looking at yields moving lower in the UK, but they were just at a 2011 high for the 10-year. How much stricter, how much tightening does the BO need to do to attract foreign investors?
And that run-up, if you take today out of the mix, that run-up in UK gilt yields has done nothing to support the pound, which is currently trading at, what, 113.52, question marks about how much softer the pound is going to become, and then the inflationary impacts of that as a consequence. Currently, the pound down 0.2%. Right, coming up. Trade ties fray as tensions rise between China and the European Union. We're going to speak to the president of the EU Chambers of Commerce in China out of Beijing. Stay with us. This is Bloomberg.
What about cryptocurrencies? Are you a believer in cryptocurrencies?
No, I'm not a believer in cryptocurrencies. And I would say that cryptocurrencies are a bubble. And I would describe cryptocurrencies as a limited supply of nothing. So to the extent there's more demand than the limited supply, the price would go up. But to the extent the demand falls, then the price would go down. There's no intrinsic value to any of the cryptocurrencies, except that there's a limited amount.
Well, based on what you've just said, why would you not put a big short of some type on cryptocurrencies? Or maybe you have, but do you think that's a good short?
Well, you know, when we look for these subprime, the reason why we shorted the subprime in size because it was asymmetrical. You're shorting a bond at par that has a limited duration that trades at a 1% spread of treasury, so you can't lose more than the spread in the duration. Yet if it defaults, you can make the par amount. In crypto, there's unlimited downside. So even though I could be right over the long term, in the short term, as the case of Bitcoin, you know, went from 5,000 to 45,000, you know, I would be wiped out on the short side. So it's just too volatile to short.
Everything you need to get set for the start of U.S. trading. Bloomberg The Open with Jonathan Farrow. Drilling down on the numbers and preparing you as only Bloomberg can. Weekdays on Bloomberg. However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Welcome back to The Open. 30 minutes into your European trading day. Here are your top stories. Putin announces a partial mobilization, escalating the Ukraine war. He vows to use all means necessary to defend Russia and pledges to annex occupied territories. Moment of truth. The Fed is expected to hike by 75 basis points for a third straight meeting. Nouriel Roubini, a.k.a. Dr. Doom, sees a long and ugly recession. Plus, nationalization. Germany will buy Fortum's majority stake in gas giant Uniper for €1.70 a share. And Tom, amid all of the uncertainty, all of the geopolitical stress and central banks, European stocks on a headline basis actually in the green this morning.
Yeah, just about clinging on to some upside across the benchmark, or at least fluctuating there. Energy, of course, a big part of the mix. You've seen Brent higher by at least 2% and 1 point higher by 3%. As a result of that, the FTSE 100 is getting a bit of a bid, up 0.2%. But of course, within the context of the fact that Moscow has significantly upped the ante when it comes to its war and its war ambitions in Ukraine, of course, the uncertainty around central bank actions. We look ahead to the Federal Reserve. 75 basis might be baked in, 75 basis points, but it's the commentary, of course, from Jay Powell, and it's the dot plots that arguably will be more significant today, adding to that volatility. Across the benchmark range band, the DAX down 0.6%. Uniper, part of the play here. An historic move by officials in Berlin to nationalize this energy company. We knew it was coming. Now we get the details. Buying out its parent company for about 8 billion euros. And you're seeing Uniper dropping on the back of that, Fortum up. Of course, the parent company over in Finland. Again, the FTSE 100 up 19 points. Let's switch it over, see how things are playing out across the sectors. As I said, energy, one of the leading sectors this morning, gaining 1.85%. Basic resources, this is also proving supportive, of course, for the FTSE 100, gaining more than 1%. Utilities is a bit of a safe haven shift, and real estate, which has been under pressure the last few days, up 0.4%. Everything else, though, in the red, led by travel, leisure down at 2%. Autos and parts also lower by more than 1%. So that's a check across your sectors 30 minutes into the session this Wednesday. Now, it is the world's largest trading relationship, but over the last year, ties between the European Union and China have frayed. That's as geopolitical and ideological tensions rise to the surface. The once lucrative partnership is increasingly in question as Europe reevaluates the threat from Beijing. Joining us now is the president of the EU Chamber of Commerce in China, Jörg Wuttke, who is someone who has deep experience and spent a lot of time on the ground in China, and so speaks with real authority on this question. Jörg, you've put out this latest report. Tell us about what you're seeing in terms of this ideological shift. You're talking about a China and policy making that's gone from practical economic challenges, practical and pragmatic policymaking, to ideology. How is that permeating? How is that impacting your members on the ground?
What the members are telling us that they realize ideology is trumping the economy. The good old days where China was predictable, reliable, and very efficient, given economic decision-making, is a little bit blurred or derailed by the zero tolerance on COVID, which has really caused havoc in supply chains and in decision-making on investment. Again, our members came up with 430 pages, 1,000 recommendations. So that means that clearly there's no exodus of European business from China. It actually means that we are sticking here. We have no layoffs, but we have a divergent situation right now. We have big companies, the top 10 being nearly 80 to 85% of European investment in China, so doing really well. And then the rest of the whole organizations, the 1,800 members I have, basically putting their China operations on autopilot, just sticking where they are. We can notably see that European headquarters are aiming at new investment outside China. Of course, something that not should only worry us, but also the Chinese government.
So no exodus, but looking for new investment outside of China. And Jörg, to be clear, this isn't just about COVID-19. It isn't just about the fact that China remains largely locked off from the rest of the world. This is a deeper trend that is permeating the business environment in China. That is the finding.
Well, it's a bit of a perfect storm right now. We had policy mistakes last year that led to an energy crisis. That was resolved rather fast, but at the same time also we can see there's an idea about self-reliance. It's more ideology behind it, meaning crowding out, for example, medical equipment producer. And of course that worries us, and that's all in the backdrop of a softening of the Chinese economy. So trade relations are very deep and very good in the sense that China is selling 300 billion euro of products in the first half into the European Union. At the same time, we are only selling basically 1/3 of it, basically stable from last year, meaning the ratio now is 3 to 1. And of course, there's something that worries us because the market actually is huge, but the potential for us is getting smaller and smaller. Just to give you one figure, we as European Union selling into China just 24% more than we sell into Switzerland.
So then what can take its place if investment is looking outside of China for companies who want a foothold in Asia? Where do you move on from China?
Well, in a couple of sectors, say car, machinery, chemicals, there's no choice. You have to be in China, and you have to be in China big, and that's exactly what Rhodium last week came up with this kind of Big 10 taking 80% of the entire investment. At the same time, we see smaller companies, and of course they depend on travel of their CEO coming to China, seeing what can be done over here. As that is impossible because we still have 10 days of quarantine, they go elsewhere. And all of a sudden they realize elsewhere is maybe not as bad as they thought. So Southeast Asia is interesting, India is interesting, and also, of course, we have more nearshoring. Europeans actually looking at Eastern Europe, at Turkey and other places. So in a way, the Chinese economy really has to be revamped in order to get back to this kind of #1 place that they rightfully had for a couple of years.
Okay, Jörg, and geopolitics back at the top of the agenda today on what we're seeing in terms of Russia upping the ante and this partial mobilization. I just wondered, to what extent are your members thinking about the risks when it comes to China and Taiwan, given the response we've seen from the West, from Europe, from the US and others to Russia, the sanctions put in place? How much of that is part of the thought process and the discussion now in China?
Well, not necessarily in China, but in headquarters, I can assure you it's a big discussion. The Ukraine war is a game changer. We have a new situation where, of course, people see we have misjudged Putin. How much do we misjudge the Chinese president? And of course, that's very difficult. And keep also in mind for European business, the presence in Taiwan is huge. European business is the biggest investor of the island of Taiwan with 45 billion euro. So in a way, if that is a blockade or there's going to be even a war, the European business is going to take a major hit, in particular as 90% of the top-end chips come from the island of Taiwan. So in a way, it is very essential for us to keep communicating to the Chinese government. We really need a change, less aggressive, less robust, more opening up, more focused on the good old virtues that they had displayed for so many years.
Jörg, have your members been preparing themselves for further U.S. sanctions, Europe sanctions on China? And if so, what does that preparation look like?
Well, you definitely have to do this. You have to do your homework, because if you get caught, it's going to be really costly or even ruin your company. Definitely, in many ways. One is, for example, that we look into our portfolio where there's equipment that comes from the US that's been sanctioned, which our customers that are sanctioned. But also we can see a divergent situation right now. Machine builders from Europe are getting asked in the US to actually produce American style, meaning no Chinese components in there. And in China, we get the same request now, please sell to me a product which has no American components or software. So imagine many of these companies are very small. They have to make 3 products, one for China, one for America, and one for the rest of the world. You can imagine the complexity. And at one stage, this actually might lead to the fact, do I actually drop one of those markets?
Mm. Always excellent, always insightful with the feel on the ground, the analysis on the ground from Jord Vucker, of course, EU Chamber of Commerce in China. Thank you very much indeed, President of that organisation. Okay, let's get to the Bloomberg First Word News now with Laura Wright. Laura.
Thanks, Tom. President Putin has declared a partial mobilization and vowed to use all means necessary to defend Russian territory. The country's defense minister says 300,000 reservists would be called up, though they will not be mobilized all at once. Earlier, Donetsk, Luhansk, and 2 other Russian-controlled regions in Ukraine said they will hold referendums on annexation within the next week. Germany is to nationalize Uniper in a historic move to rescue the country's largest gas importer and avert a collapse of the country's energy sector this week. Berlin will inject 8 billion euros into the utility via a capital increase at €1.70 per share. The move lifts the government's ownership to 99%. Details of a UK government cap on energy prices for business users this winter are set to be announced later today. Bloomberg understands maximum costs could be set at about 21 pence per kilowatt hour for electricity, with the discount set to last for 6 months from the 1st of October. The bailout package could cost about $40 billion and comes on top of support for households already announced. European Central Bank President Christine Lagarde says borrowing costs will rise more in the months ahead. Speaking in Frankfurt, Lagarde said the ECB has taken major steps to tackle inflation. She also said more hikes are coming over the next few meetings. Global news 24 hours a day, on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Tom.
Okay, Laura Wright here in London. Thank you very much indeed. Coming up, investors in Europe have nowhere to hide as increased volatility, a potential for a recession and an energy crisis reduces the appetite for risk. We've got more on that story next. This is Bloomberg.
Crucially important, and I think we've moved from this attitude from it's an indulgence, a waste of time, almost an illness that needs a cure.
For something as universally important to human life as sleep, mysteries surrounding its necessity and utility have only just been recently uncovered.
Some of our biggest discoveries were in the 1970s or 1980s, and so it makes it a really exciting field because it seems as though we're uncovering new insights each and every day.
Some scientists are going further to find out how sleep and what happens there can be harnessed to further expand our understanding.
It's easy to memorize things. That makes you smart if you can spit back a lot of facts. But if you want to be wise, if you really want wisdom, you got to know when and how and why to use that information. And that's what your brain figures out while you're sleeping.
Lots happening on Wall Street.
I think Jay Powell said things that were indefensible.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
We think that's the next secular shift.
From businesses most influential and instrumental.
It's knocking it out of the ballpark.
It's a challenging dynamic.
This is a level of uncertainty that we haven't had to deal with.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
Welcome back to the Open. We're about 44 minutes into your European trading day, basically unchanged on a headline basis for European stock 600, but that belies the volatility underneath the surface. Looking at both the DAX and the CAC are on moving lower. FTSE 100, that's pushing higher, given we're seeing a lot of energy companies bid up today, with WTI prices surging some 3%. Now, all of this revolving around not just a Fed, but continued geopolitical risk in Europe, given Putin announcing more mobilization of the war in Ukraine, of troops there. What does this mean for the investment appetite, not just for public markets, but private capital as well? Let's get into that. We're joined now by Vincent Policar, Infrastructure Director at KKR, who, of course, is in Cannes right now at a conference for private capital. Vincent, thanks so much for joining Tom and I this morning. So this most recent news coming from Putin of potential and likely escalation of the war in Ukraine, does it change the risks at all of investing in European infrastructure?
Well, first of all, Danny, thank you for having me on the program today. Really appreciate that. The short answer, candidly, is it doesn't really change a lot for us, because if we take a step back and think about what infrastructure investing means and what are the characteristics of the investments that we do, those investments are really made to be largely immune to what happens to economies, largely immune to what happens to inflation, and largely immune to what happens to commodity prices. And so if we have done our job well, we should have a high degree of protection against all of those trends in our portfolio in infrastructure investing.
And of course, part of your infrastructure investing, you are investing in the energy transition. But Vincent, we do typically see historically in moments of crises that takes a backseat, the push towards energy transition, which feels especially true now that Europe's priority is frankly just securing the energy, the heating, the needs for the winter. How does that affect you?
No, look, it's a great question, and in a way we had the same debate when we got into the COVID crisis a few years ago. You know, how is it going to impact the ambition that we have in Europe around the energy transition? Are we going to stop it? Are we going to pause it for a while? I think the reality is, you know, in a way this should only accelerate those trends. We're all aware of the necessity to transition the energy from you know, an environmental standpoint. I think today people realize that there is, to your point, the security dimension to this as well. Clearly, you know, in the very short term, we can't just give up on all the fossil fuel energy sources, gas and coal. But in a way, this crisis is just bringing home the fact that we have to tackle that crisis, that transition. And again, we see that really as an opportunity for private investors like us. We have the capital, who have the capabilities to do that. And candidly, when we speak to governments in Europe these days, they are not giving up on that ambition, and this crisis is not going to change it. If anything, it really focuses the mind on the fact that we have to transition the energy mix, which again, we see as an opportunity for private capital.
Vincent, it sounds like they need to set up some wind turbines behind you there and go on. The wind is very strong. You're battling through it like an absolute pro. In terms of what's happening in this yield environment and the rates environment, as we look ahead, of course, to the Federal Reserve later today, the BOE next on Thursday, of course, how is the higher rates environment? Real yields are up to levels that we haven't seen for quite some time. How is that affecting your investment decisions and indeed your ability to raise funds, raise capital?
I mean, it's an interesting one. So, and I guess the answer is slightly different if you look at what we have in our portfolio today versus what we are trying to buy. So from a portfolio standpoint, again, back to the risk approach we take, it doesn't really impact a lot of what we already have. The reality is the capital structures for our investments are long dated for the most part, and the interest rate risk has been hedged for most of the debt capital that we have raised. And so it is not going to impact in a meaningful way the portfolio of assets we have. To your point, the question is more about new investments, and there it impacts it in two ways. We obviously have to assume higher cost of funding for those new investments today and possibly in the future as well. And also it probably means that we take a bit less leverage than we would have historically because the cost of that leverage has gone up. But fundamentally, the availability of capital for infrastructure, both on the equity side and on the debt side, is still available today, which is why you see that market is actually not slowing down, and the amount and the volume of transactions in infrastructure is still quite sustained.
Vincent, how much of that desire to take lower leverage is really just a need? And I ask that because we have seen banks pulling back on lending. The Citrix deal, for example, of course, that's equity, very different, but banks struggling to offload that debt. Is it difficult for you to get financing right now?
To be clear, it is not. And to your question, this is not an obligation that is imposed on us. There is still a lot of funding available in the debt market. It is frankly more a decision that we make to not take all of that debt because, again, we think that the conditions that we will be borrowing are quite high. Obviously, in order to be able to do that, you need to have sufficient capital, and this is where big, well-capitalized players like us have the ability to do it. But this is, to your question, very much our decision, as opposed to an inability to get financing in the current market.
Vincent, is there a level at which rate rises from the ECB and beyond that rates get to a point where cash flow can't sustain the leverage taken on by the industry? Is there a certain level you're looking at that you start to get concerned?
I wouldn't think so. I mean, honestly, when we look at, certainly in our case, we have always taken a very conservative approach to capital structures. We typically would put more equity than debt financing in any transaction, and so there is really no concern as to, the sustainability of the capital structures we have. It is true for us. I would say it's probably true for the industry as a whole. People have learned their lessons from the past, and if you go back to the global financial crisis back in 08, 09, you had back then a situation where a number of infrastructure investors probably had taken too much debt and really suffered from that. So I would think, without having the exact statistic in front of me, but I would think that the industry has become very cautious on capital structures, and I wouldn't see a systemic risk, even in scenarios where rates go up quite meaningfully.
Vincent, just very quickly before we let you go, there's been a dearth of exits, of course, because of what's happening across these markets. Do you expect that to change in the 6 to 12 months ahead?
No, I mean, clearly there is a lot of capital to be invested in the asset class, a lot of dry powder, as we call it. And so, as I said, the M&A activity remains very sustained, both in terms of acquisitions and disposals. And I think you can expect the asset class to remain quite active in the foreseeable future as well.
Okay, Vincent, thank you so much for joining us from a both sunny and windy Cannes. Vincent Policaro, co-head of Europe Infrastructure at KKR. Coming up, Fordham shares soar after Germany said it will buy all of the Finnish company's stock in troubled energy giant Uniper. I'll have that story for you next. This is Bloomberg.
energy prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down, the manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Welcome back. Germany will nationalise Uniper in an historic move to rescue the country's largest gas importer and avert a collapse of the energy sector in Europe's biggest economy this winter. European Investment Bank President Werner Hoyer weighed in earlier.
We have just seen the situation with Uniper, and there might be more of this because in view of the incredibly high energy prices, which cannot be passed on to the consumers, so the states must come in. This is probably something we will see for a while. But this makes it even more important to draw the consequences of all of this. And this means we need to continue with resolve on the energetic transformation in Europe and in the world, because otherwise we'll leave the weapon in the hand of Mr. Putin.
Okay, for more on this, we are joined by Bloomberg's Chad Thomas in Berlin. Chad, we've been talking then about this potential bailout for quite a while. Why is it going ahead now? What are the details?
Well, in many ways, this was inevitable. Uniper, we've been told, was losing about 100 million euros a day. That's after Russia basically shut off the spigot of gas. They were the biggest importer of Russian gas. And essentially, the German government realized they had to step in. They had to step in quickly. Just to underscore how quickly they felt they had to move, Chancellor Scholz, of course, is in New York right now. He's at the UN General Assembly. And they announced it this morning without the Chancellor being in the country, feeling they had to take action now to rescue Uniper and make sure that the company stayed afloat.
Chad, what's the reaction been in Germany?
Well, the German public obviously is very concerned at the same time as this nationalization of Uniper, which is going to cost billions and billions, and we don't know exactly how much will have to be poured in the coming months. They're putting in $8 billion today for the nationalization. That comes on top of a large amount that they've already given to it. But on top of this, there's a very controversial gas levy that's about to be put in place in Germany, where people will have to pay more for their energy. So people obviously are very angry about that. And there's a lot of question whether that levy is even going to happen.
Right. Chad, thank you very much. Bloomberg's Chad Thomas there in Berlin. And Tom, closing out the show, looking at a euro trading below parity.
Down 0.6% and a bid for bonds as well. Yields lower across European debt and US debt as well, on geopolitical risks predominantly, but also, of course, as we look ahead to the central bank action from the Fed. That is it for the European market open. Lots more action coming up, though, across the hours ahead. Surveillance Early Edition up next. This is Bloomberg.
they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
The difference between political gossip and policy intelligence. Bloomberg Government provides our clients with expert reporting, analysis, and public affairs tools that give you the edge in reaching policymakers on the Hill. When you're in the business of influence in Washington, information and connections are the currencies on which you rely. For knowledge you can act upon, the difference is Bloomberg Government.
Those who are keeping silent today actually are in a way complicit with the cause of a new imperialism and a new order that is trampling over the current order. And there's no peace possible here.
The return of imperialism is not only a disaster for Europe, it is also a disaster for our global peaceful order, which is the antithesis of imperialism and neo-colonialism.
The United Nations Charter and the ideals it represents are in jeopardy. We have a duty to act, and yet we are gridlocked in colossal global dysfunction.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Good morning and welcome to Bloomberg Surveillance Early Edition, everyone. I'm Francine Lacqua here in New York. We're here for UNGA. We, of course, follow geopolitics and what we heard from Vladimir Putin. Here's what's coming up on today's program. Putin announces a partial mobilization, escalating the Ukraine war. He vows to use all means necessary to defend Russia and pledges to annex occupied territories. Moment of truth. The Fed is expected to hike by 75 basis points for a third straight meeting. Nouriel aka Dr. Doom sees a long and ugly recession. Plus, nationalization. Germany will buy Fortum's majority stake in gas giant Uniper for €1.70 a share. Now, there is quite a lot going on today, so let's check on the markets. Let's get straight to what those are doing. There's a clear move to risk off Treasuries, gold, the dollar actually leading some of the gains in these haven assets after the Russian President Vladimir Putin concretely stepped up his war against Ukraine. That's rattling markets that were already bracing for a supersized rate hike from the Federal Reserve. You can see euro dollar below parity at 99.11. Brent crude, we always look at oil, although some of the mishap, or certainly what Russia was extending or hoping to do with Russia, has already in large partly priced in. We look at the 2-year yield in the U.S., but also the 10-year at 3.5299. I've looked at European stocks. Look, it's all to do with what the Fed is doing. Oil jumping as investors react to Putin's vow to use all means necessary to defend the territorial integrity of Russia. So in the hour, we'll try and figure out geopolitics. The timing, I think, of this is extremely important. This is after also President Putin met with President Xi of China. We don't know whether that's a coincidence or not. And this is also extremely important in terms of timing because there is the UN General Assembly in New York. I'm here for that. You can see the FTSE gaining some 0.4%, but the CAC down 0.3%. So the Russian President Vladimir Putin has signed an order for partial military mobilization beginning today. In a televised address to the nation, Putin said that he supports referendums in Russian-occupied Ukraine on annexation and that Russia will take necessary steps to defend its territory. Now, for more, we're joined by Bloomberg's Europe correspondent Maria Tadeo. Maria and I have, of course, to be watching speech by speech, word for word, exactly what's been happening in the UN here in New York, but also what Vladimir Putin had to say. I mean, this is doubling down on his efforts, and he's also pulling in the reserves, Maria.
Completely, Francine, and this is escalation in tone, but actually in forms and actions. Now, in terms of the measures announced today by the Russian president, he is bringing in men who are on the reserves of the Russian army, who had served in the past and could now be called in to join in on the battlefield. The Russian authorities say that they can bring in about 300,000 new men to join the fight. In a way, Francine, this does show that the special operation is not going according to plan. It also speaks to the urgency and that logistical failure last week from Russian authorities in Kharkiv, where they, of course, lost ground to the Ukrainian army. But overall, if you look at this on the bigger picture, it is clear that in the medium term, if you were hoping for a diplomatic solution out of this, you can kiss it goodbye. It really is escalation from the Russian side, particularly, Francine, where Vladimir Putin says, I will support these referendums. Of course, it's straight out of the Russian playbook. There will be a yes to join in the Russian Federation. And at that point, he said, we will do everything, all means to protect our territory. And this is not a joke. It's not a bluff.
I was going to ask, actually, so this is also a threat possibly of nuclear war. How will the West react to this?
Completely. And this is the one thing, and Francine, you know this very well, especially being in New York today. This is the one thing that Western leaders do not want to get trapped in an escalation of words. They believe that nuclear, you have to be incredibly careful, and you should not use this as a political weapon. To me, of course, again, at the nuclear, or excuse me, at the EU, the United General Assembly, I would look out for the United States and President Biden, and of course, reaction from the West at this point. Again, if you were hoping that there could be some diplomatic solution to this on the medium term, today, this just makes it so complicated for all sides.
Maria, thank you so much. Maria Tadeo, they're joining us, of course, from Brussels. We heard that speech from Vladimir Putin. He certainly did not mince his words, really saying those who are trying to blackmail us with nuclear weapons should know that the wind patterns can also turn in their direction. Now, we're joined by Domitila Sagramosa, Senior Lecturer in Security and Development at King's College London. She is one of the smartest but also clued-in professors when it comes to the Russian strategy. Domitila, when the president of Russia threatens once again nuclear war and really puts in drafts of many more people, I think about 300,000, to try and fight this, is it an act of desperation or is this a warning sign for the West?
I think it is, in a way, a sort of a recognition that the way the war was being carried out was not really effective. I think there was shock in Russia about over the losses in Kharkiv. So Putin really was sort of backed in a corner. He either had to react and escalate, or he had to sort of find some kind of negotiated solution. I think he decided to go for sort of the escalation, the increase in the number of troops, which is one of the key weaknesses of this operation, was the lack of infantry, of manpower. So clearly Putin is sort of raising the stakes. But what I think is really important to highlight is that this is going to also probably lead to a prolongation of the war and a lot of pressure on the West by Ukraine to sort of also increase the range and the quality of the weapons and the amount of weapons that are being delivered to Ukraine. So I think we're in a... Yes.
Is this a decisive moment? Because things could escalate quite quickly from here. I know we're hearing from the EU Commission they will propose more energy measures this month. How does the West respond? And actually, is there a concern that Vladimir Putin, with this big escalation, with the speech this morning, also felt empowered that by the Chinese president last week?
There are a lot of points to think about. On the nuclear question, I think what Putin is always trying to do is to scare the West, to deter the West from raising the stakes, from increasing the amount of weaponry that is delivered to Ukraine, and to sort of convince many of those who are hesitant about delivering additional weapons to think that Russia is sort of unbeatable. This myth that Russia, cannot be defeated, remembering sort of the experiences of, for example, the Second World War. So to think that, Russia will always have more resources, will always have more men, will always have the capability eventually to defeat for example, the Ukrainian armed forces. So that's the point of this sort of rhetoric around nuclear weapons. I think we need to be very cautious because the threat of retaliation is there, and Putin very well understands that if he uses nuclear weapons, the response can also include nuclear weapons from the Western side. On the question of energy, this is a very sensitive issue, and I think we should not exclude the possibility that Russia at a certain point sort of decides to cut the supply of gas to Europe for maybe a couple of weeks to put additional pressure. So this is something that, European markets and European economies must consider very carefully and try to take measures to try to address this risk. I think we know that a lot of the storage facilities have been filled up, so we are not in a very terrible.
Domitila, how much do we understand about the support of this war and the escalation from Putin's generals and also from the population at large? So we understand he could draft in about 300,000 soldiers. So this is people we understand, and I don't know whether you think differently, with military experience. What if Vladimir Putin, puts martial art in Russia? Does everybody turn against him then?
It's very interesting. If we look carefully at his speech, I mean, he talks about, calling reservists, but he says very clearly that these are people with military experience. So he's not calling on maybe those who have had the military service many years ago or only for a year. So he's really emphasizing those who are in the reserves and have substantial military experience, and also that they're going to receive the payment as if they were professional soldiers. So he's trying to sort of walk this thin line, not to create panic, because yesterday, as we know, there was a lot of concern among the population, people thinking or trying to find ways of maybe leaving Russia. He, of course, is always worried about the middle classes in the big cities and those who could sort of call, or sort of call for an end to the war. It's very interesting that a very famous Russian actress, Alla Pugacheva, posted on Instagram her opposition to the war, and he has a lot of followers. So, Putin has to be careful. He knows that there isn't a lot of support for this war and generally for full mobilization. People might be very supportive of the operation if they're not personally involved. But I think that he has taken a gamble. He has decided that this is the only way to sort of address the challenges on the terrain. And I think that really raises the stakes for the West. To what extent, for example, is now America ready to supply the famous ATACMS, which are these long-range tactical missile systems, which would hit Russia, or the areas that are occupied by Russia, and maybe hit Russia further afield. Now, the consideration that these sort of occupied lands, and as a result of the referendum, are going to become Russian territory is trying to send a message sort of not to escalate. But I think, we will also in the West be in a position to say, how are we going to respond militarily?
Domitila, thank you so much for joining us. Domitila Sagramoso there, Senior Lecturer in Security and Development at King's College London, with very clear thoughts as always. Now, coming up, investors in Europe have nowhere to hide as increased volatility, a potential for a recession, and an energy crisis reduces the appetite for risk. We have more on that story next.
I've always been a person who's just been attracted to hair. I like to sit and think and theorize how I can manifest these visions that I have for braiding, and how I can take something that may seem like it's a line drawing in my mind and apply that to someone's scalp.
We are the only culture that has hair that grows out of our head the way that it does. Anyone from the African diaspora is born with this amazingly curly hair that can be shaped into a variety of different ways of expression.
I want Black people to love themselves for how they naturally appear, and also to appreciate the cultural practices such as braiding that our ancestors have practiced for centuries.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, risk appetite and short supply has increased volatility, a potential for a recession, and of course an energy crisis in Europe leaves investors with nowhere to hide on the continent. All eyes will be on Jay Powell later today as traders expect another jumbo rate hike from the central bank. Now, we're joined by John Bilton, head of global multi-asset strategy at JP Morgan Asset Management, and also Bloomberg's Christine Aquino from our MLive team. Christine, very quickly, I mean, we have some very strong moves because of what's happening in Ukraine and certainly Putin stepping up in his war. But how much of the focus is on that, and how much is on focus on what the Fed will say?
Well, Francine, if you look at Treasury yields in particular, the fact that we're still staying within yesterday's ranges, we did pull back a little bit, but really not by much. That really shows you where the balance of risks lie here. Yes, Russia is important. Investors are keeping an eye on it, but ultimately there is so much of a pull that the Fed has on yields, and particularly an upward pull on yields. The fact that we're still very much closer to that 4% level on the U.S. two-year yield really shows you what is the most important catalyst today for markets, and that would be the Fed.
Christine, thanks so much. John Bilton, I mean, it's almost like President Trump is trying to up the Fed in this. Does it change at the margin their thinking if we have a real escalation in war, with money being spent, with extra weapons being sent to Ukraine?
I mean, I think ultimately the Fed are looking at inflation, and this is just a further signal that this is a long-standing conflict. Could this be escalation to de-escalate? Who knows? Ultimately, though, it keeps pressure on energy markets. It keeps pressure on costs of oil, on costs of gas, etc. And I think that's going to feed back through into persistent concern about inflation. The Fed are laser focused on inflation. We saw the print earlier in this month, and of course that's led us to a point where the Fed is looking at doing 75 basis points, and that feels exactly what they're going to do. Day-to-day fluctuations in markets are really not something I think the Fed are looking at. They're looking at the long-term goal of bringing inflation back into a tolerable range.
John, and I know, again, some of this foreign policy is very difficult to calculate or to put a finger on, but does the Fed act like a central bank in a war? So does it make them less likely to push the U.S. in a recession because of the war in Ukraine? Or do you think they still just focus on inflation?
Well, I think that, bear in mind, the Fed have two clear mandates. One of them is employment, one of them is prices. They also have a nod towards market stability. And at the moment, with employment below what they consider to be full employment in the US, but inflation still well above their target, they're going to be focused 100% on this inflation issue. And what markets do from one day to the next, I think is going to be something which is they're aware of, but it's unlikely to be something which is going to change their trajectory or indeed their guidance as we think about not just the rate move today, but what will they do with their summary of economic projections.
John, why would they not do 100 basis points today? Because if you look at entrenched inflation, once you lose that spiral, then you have lost it.
Well, I think the situation is that the Fed are looking for a series of rate hikes that will bring inflation under control gradually and with a lag. They've already made significant moves upwards. This has been the fastest rate hiking cycle we've seen really since the 1990s. So, to suggest the Fed are behind the curve now probably isn't reasonable. I think what's important for the Fed today is that they are going to look to quash any idea that rates are going to go up, peak, and then begin to drift down quickly. I think they are looking to demonstrate that this is a Fed that is in the higher for longer zone, in the same way that the previous Feds have said lower for longer. And I think that's what they want to get out of markets.
So John, what does it mean that you're positioning yourself in the markets with? I know you prefer higher quality credit to equity. Is there anything in equity that you would buy?
Well, I think right now we've got to, let's look at sort of day-to-day trading. We've had, global equities down 6% since the 13th of September. It's been a very significant sort of down move. Could we get a bit of a boost if the Fed come in line with expectation? Yeah, possibly. But at the end of the day, we're still looking at an earnings downgrade cycle which has yet to play through. And so as that works its way through, I think it's very difficult to get excited about global equities. I mean, let's face it, this is the Fed are not just taking away the punch bowl here, they're actually pouring the dregs down the sink. And I think equity markets and earnings within equities need to reflect that before we can get more positive.
Christine, I know you also look, of course, at lower yields and the kind of the knee-jerk reaction that the markets have had in the last 24 hours. Are there any points in terms of treasuries, but also gilts and other fixed income that you're looking for?
Well, Francine, I think what we're seeing today is quite interesting, is this bit of a divergence in the reaction in treasuries versus European bonds, particularly those German bunds, right? I think that really is where we saw the outsized reaction to the Russia escalation in markets today. And that presents some divergence opportunities for any traders out there. Of course, it'll probably be a short-term thing, but, at the moment, if there are investors looking for idiosyncratic opportunities, that could be one, this sort of divergence between potentially lower yields in Europe as a result of what we're seeing in terms of the Russia escalation versus treasury markets, which are still very much focused on what the Fed is doing despite what we're seeing in global geopolitics. So I would keep an eye on that one in particular, how this spread plays out between European yields, UK yields versus treasury yields, as that could be something that could be quite interesting, of a bit of divergence over the next few days or weeks.
John, I know you also maintain an overweight in cash. Is that to give you an ability to, I guess, go into the markets and buy something that looks cheap?
Well, there's partly that, of course, because, one thing that happens when markets come under stress is you do get dislocations, and we've seen some dislocations indeed come into parts of European markets, parts of higher grade credit. We're seeing reasonably good all-in yields in the upper end of the quality spectrum, also in the shorter maturities. But at the same time, bear in mind, cash is now an asset which is providing a return. And I think that with the Fed moving, that's going to continue to be the case. So having some level of ballast with dry powder within the portfolio is important, but also bear in mind, it's something which, for many, many years, almost a decade or more, cash was something you just didn't want to have because of the very low level of real rates. And those days are very much behind us, we feel.
John, I know you think that the U.S. may narrowly avoid a recession, but there's no hope of that for the UK and the EU. Is there anything that you'd be buying in the UK or the Eurozone right now?
Well, I think within Europe, you've got to be very careful around the sector mix, because at the end of the day, the biggest issues that we face within the Eurozone, of course, are around the cost of living, around the cost of gas and energy inputs. And that means that that's squeezing income statements for companies. Balance sheets are actually surprisingly good. So, parts of the financial sector, this is not the banking market that suffered the problems back in 2010 through 12. It's a much more stable market. There are also good, higher quality, more defensive sectors to be looking at. So this is not so much in our mind a world where we're looking for a big set of regional divergences. In fact, we want our risk spread reasonably widely across regions. But there are opportunities starting to open up if we can lean more into that balance sheet strength and try and avoid those places where income statement weakness is going to come through to earnings.
John, brilliant as always. John Bilton there, head of global multi-asset strategy at JP Morgan Asset Management. Of course, it's surprising from now quite a lot of people saying actually we maintain our overweight in cash, which, as John was saying, gives you the ability to get in there. Thank you as well to our Christina Kino from our MLive team. Coming up, Fed hikes loom. The central bank is expected to hike by 75 basis points for a third straight meeting. We'll have plenty more on that next, and this is Bloomberg.
the past 2 decades, China has built large infrastructure projects in almost every country in Africa.
African governments themselves said, we are tired of aid and charity. We want to do trade. We want to be treated like partners. The Chinese came along and said, great, we don't do aid and charity. We want to do business with you.
Global Gateway will mobilize 300 billion euros till 2027.
Now the US and Europe are answering back with their own infrastructure initiatives to counter China, but African experts are skeptical.
China has been that guy around the corner with, a bouquet of flowers to Africa, the US, Europe and the UK have time and time again said, be careful of the flowers you see out of the window, they have thorns on them.
Markets are preparing to close, but the day is not over yet.
Stock that is now up about 45%.
A lot of volatility right now.
You need the power of the Bloomberg terminal to get you market-moving data before anyone else.
These numbers are much higher than expected.
Upgraded today to overweight.
You need top analysts to bring you exclusive global insight into cross-asset markets.
The muni bond market.
China is a really big focus.
Bitcoin ain't playing along today.
It's going to be short-term.
Bloomberg Markets, The Close. Weekdays on Bloomberg. Everything you need to get set for the start of U.S. trading. Bloomberg The Open with Jonathan Farrow. Drilling down on the numbers and preparing you as only Bloomberg can. Weekdays on Bloomberg.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in New York for UNGA. Treasuries, gold, and the dollar leading gains in haven assets. This is after Putin stepped up his war against Ukraine. You're seeing also a bid for a lot of these defensive stocks that we're expecting the West maybe to support Ukraine even more. Thales 5.5% higher. And then also looking at Fortum. This is after Germany said it will nationalize Uniper in a pretty historic move. We'll have plenty more on the markets and the Fed. This is Bloomberg.
Crucially important, and I think we've moved from this attitude from it's an indulgence, a waste of time, almost an illness that needs a cure.
For something as universally important to human life as sleep, mysteries surrounding its necessity and utility have only just been recently uncovered.
Some of our biggest discoveries were in the 1970s or 1980s, and so it makes it a really exciting field because it seems as though we're uncovering new insights each and every day.
Some scientists are going further to find out how sleep and what happens there can be harnessed to further expand our understanding.
It's easy to memorize things. That makes you smart if you can spit back a lot of facts. But if you want to be wise, if you really want wisdom, you've got to know when and how and why to use that information. And that's what your brain figures out while you're sleeping.
market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Putin announces a partial mobilization, escalating the Ukraine war. He vows to use all means necessary to defend Russia and pledges to annex occupied territories. Moment of truth. The Fed is expected to hike by 75 basis points for a third straight meeting. Nouriel Roubini, also known as Dr. Doom, sees a long and ugly recession. Plus, nationalization, while Germany will buy Fortum's majority stake in gas giant Uniper for €1.70 a share. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in New York for UNGA. So we focus on the politics. We, of course, focus on foreign affairs, also impacting the markets and some of the havens. Now, let's go straight to the Bloomberg. First word news. Here's Leanne Garrett. Hi, Leanne.
Hi, Francine. President Vladimir Putin has declared a partial mobilization and vowed to use all means necessary to defend Russian territory. The country's defense minister says 300,000 reservists would be called up, though they will not be mobilized all at once. Earlier, Donetsk and Luhansk and two other Russian-controlled regions in Ukraine said they will hold referendums on annexation within the next week. Now, Germany is to nationalize Uniper in a historic move to rescue the country's largest gas importer and avert a collapse of the country's energy sector this winter. Berlin will inject €8 billion into the utility via a capital increase at €1.70 per share. The move lifts the government's ownership to 99%. Details of a UK government cap on energy prices for business users this winter are set to be announced later today. Bloomberg understands maximum cost could be set at about 21 pence per kilowatt hour for electricity, with a discount set to last for 6 months from the 1st of October. The bailout package could cost about $40 billion and comes on top of support for household energy, which has already been announced. And European Central Bank President Christine Lagarde says borrowing costs will rise more in the months ahead. Speaking in Frankfurt, Lagarde said the ECB has taken major steps to tackle inflation. She also said more hikes are coming over the next few meetings. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thanks so much. Let's check on the markets. And of course, this is what we're seeing across the board. Definitely havens advancing, euro dropping. Putin said he will step up the war. Now, this is rattling markets that were already bracing for a supersized rate hike from the Federal Reserve. I'm looking at oil jumping as well as investors, again, actually reacting to Putin's vow to use all means necessary to defend the territorial integrity of Russia. Now, the 10-year Treasury yields slumping around 4 points to 3.52%. Similar dated German debt also dropped. If there's one thing you need to think about, of course, is the escalation point, what Putin's war means for inflation globally, and then Fed officials, of course, are about to put numbers on the pain that they've been warning of when the central bank publishes new economic projections. That will be later today. So all eyes on Jay Powell as traders expect another jumbo rate hike from the central bank. 75 basis points is expected, but a 100 basis point move cannot be ruled out as part of the Fed's efforts to stamp out inflation. Meanwhile, the Bank of Japan has spent more than 1 trillion yen, nearly $7 billion, on its fixed-rate bond purchase operations as a benchmark 10-year yield held at the upper end of the central bank's tolerance band. Now, we're joined by Greg Peters. He's co-chief investment officer at PGIM Fixed Income. Greg, thank you for joining us. What a day. If you look at the havens bid and all of the uncertainty in the markets, definitely exacerbated by what we're seeing in Russia, Ukraine. What do you buy now?
Well, I think you buy caution. Honestly, there's so many moving parts. I think it's a time to, not necessarily dive in. The landscape is just changing so radically. If you think about where we were 6 months ago, a year ago, in terms of central bank rate forecasts and expectations, it's radically different today. And so there's catch-up by global central banks. And I think the risk markets are absorbing it. But I do think there's good news on the horizon. I just don't think it's necessarily right at this time.
Yes, Greg, what exactly is priced in? We know, the trajectory is basically the Fed will continue hiking, that there will be a slowdown in the economy, and yields will move on the back of it.
Yeah, so I mean, the market's pricing, over 4% now in terms of front-end rates. So the Fed, continues. I think the important shift and what the Fed really wanted to achieve pretty successfully is there were rate cuts in the market priced into next year, and some of that was a byproduct of cheap hedging. But by and large, that was something that the Fed was uncomfortable and, quite frankly, didn't make any sense. And so the new narrative and the new pricing in the market is that rates need to move higher and they need to stay higher. Whereas just a month ago, it was, yeah, rates are moving higher, but they're coming back down. And so I think that repricing has a real important implication for risk markets.
But Greg, are you surprised at not some of the repricing that we've seen so far, but how fast it happens? And does it mean that we could see a lot more volatility, or kind of zigzagging or whipsawing that we've seen?
Yeah, it's continuation of volatility. So we've seen heightened vol in fixed income all of last year into this year. Quite frankly, we were expecting vol to subside this year, as the typical pattern is once the Fed and central banks start moving, volatility starts to come down. But the fact that they're so far behind the curve and they removed forward guidance and they're telling you they're data dependent means that vol is here to stay. So I think this is the world that we live in. It's central bank volatility and geopolitical volatility.
What makes you worried the most? Is there something that the markets misunderstand right now that could lead to a violent correction?
So what challenge I think we all have, and Fed and central bankers have that same challenge, is really trying to understand inflation, right? So inflation is really difficult to forecast, quite tricky in fact. So getting your hands around the path of inflation is really the challenge. And so, central banks have to be responsive to that inflation dynamic. So I think what you're seeing, and the concern around central banks and investors, is that it's much more broad-based, much more global than initially believed and perceived. And so I think it's really about inflation. That's the risk in the market, and that's what the Fed is fighting.
Greg, what are you buying and selling right now then?
Yeah, so we're actually seeing opportunities in fixed income, actually. So there's a lot of moves in the, Fed moves in the front end of the curve. I think that's starting to become quite interesting. I think the more liquid part of fixed income repriced early. So, for example, structured products is an area that we find really quite interesting, kind of short duration, high yield. We're actually seeing more value in European corporates, even with the challenges ahead, than U.S. corporates, just given kind of the pricing differentials. So we're actually seeing relative value. It's just not this waving in type of beta environment.
So what you're talking about in Europe, is this industry dependent, or is it specific companies?
Well, so it's more specific companies, but we have the luxury of seeing the same company that issue in euros and dollars, and so the prices are really quite different in euros and dollars. So it could be the same company, a U.S.-based company, in fact, that trades dramatically cheaper in Europe, and that's the opportunity that I see. So the dislocation, the segmentation has really kind of created these unique alpha opportunities.
Greg, but I guess if you get them wrong, then you have more to lose, right? So do you adjust those kind of portfolios on calls on a shorter horizon than you used to in the past?
Yeah, so I don't know if you have more to lose necessarily, because you actually, at the end of the day, own the same assets in the company. You just own it in a different format. So I think that's kind of the misperception by the segmented marketplace. But yeah, what we're worried about, broadly speaking, is global recession, and what does that mean for asset values? What does that mean for defaults? And what does that mean for recovery? So risk is on the rise, and so pricing, I think, will continue to kind of move to reflect those risks.
Greg, the terminal rate, we understand, is around 4%. What if we were wrong because of the escalation in Ukraine?
Meaning that inflation continues to persist?
More aggressively,
I think I think that's kind of in the price. It's hard to tell. I mean, we're much closer to the end than where we were, to state the obvious. So at 4%, we're getting to a place where how much more does the Fed in this case have to do? That's a very different narrative than where we were, I don't know, 6 months ago, when it was below 2% and investors were thinking the Fed was done. So I think we're approaching the point of peak hawkishness. We're just not quite there yet.
We heard from a former NPC policy member. He's Danny Blanchflower. He criticized the Prime Minister of the UK and basically says just short the pound from here. You're in London, Greg. We're trying to figure out what this new administration under Liz Truss really wants to put in place. Would you short UK assets right now?
Yeah, so I think the plan and the policy is a struggle from a financial perspective. So I still see downside in sterling. So I do think kind of the combination of much more spending and, let's say, proposed tax cuts is not great for UK assets, not great for sterling. So yeah, I think directionally that's quite right. And unfortunately, I think the UK is kind of stuck here a little bit, and I think the pound is going to continue to reflect that.
But this is because her policies are in disarray, or how much does it have to do, because of the global context?
Well, it's a combination of many factors, right? So there's still this, trade dealing. You just saw, the conversation with Biden. So I still think, the hangover of Brexit. I think the global situation clearly is not helping. I think politics. What we're finding is that politics increasingly matters from a pricing perspective. So it's not just one aspect, but you put it all together. And it doesn't look great necessarily.
Greg, a final question. In a scenario where the Fed keeps going, what happens to the 60-40 portfolio scenario?
So the good news is that actually fixed income actually gets more attractive. And the challenge that we had, 2 years ago was when the 10-year was at 50 basis points and credit spreads were, at really tight levels, that opportunity set was really quite slim. With yields much higher, with spreads wider, I think we're in a much better place. I think 60-40, much better place. I think fixed income has been suffering this path-destination problem. And the path is rocky, but the destination is going to be a far better place than where we were a year and a half ago.
Greg, I know we're jumping around, but I also need to ask about bunds. Do you think they're still overpriced, given how hawkish the ECB has been?
I think there's scope for that to sell off as well. So it's been also quite volatile in the European markets. I think what the bund market is trying to reflect is that balance between inflation and growth. So Germany is, very much, center of the storm here. And so I think that balance makes it really difficult. But yeah, kind of on the margin, I do think there's more room for yields to move higher in bunds.
Greg, thank you so much for all of course, the insight. Greg Peters, their co-chief investment officer at PGIM Fixed Income. Now, we'll have plenty more, of course, on the markets. Also, Fortum shares rise after Germany said it will buy all of the Finnish company's stock from troubled energy giant Uniper. So we have plenty more on that story next. This is Bloomberg.
They're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
No one covers the world like Bloomberg.
We have to get interest rates higher and bring inflation back to our target.
33 million people have been affected by this flooding in the Amazon.
Disruption is the whole point of a strike.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
We have just seen the situation with Uniper, and there might be more of this because in view of the incredibly high energy prices, which cannot be passed on to the consumers, so the states must come in. This is probably something we will see for a while. But this makes even more important to draw the consequences out of this. And this means we need to continue with resolve on the energetic transformation in Europe and in the world, because otherwise we'll leave the weapon in the hand of Mr. Putin.
Well, that was European Investment Bank President Werner Hoyer speaking to Bloomberg about Germany's historic move to nationalize gas giant Uniper, a move sparked by the global energy crisis and the war in Ukraine. Now, for more on this, we're joined by Bloomberg's Chad Thomas in Berlin. Chad, great to speak to you as always. This is huge. We've been talking about a potential bailout of Uniper for a while. Why now?
Well, Francine, in many ways, this was inevitable after Russia shut off the gas to Germany. Uniper was the biggest user of Russian gas. And so we were told they were losing about 100 million euros per day. And so Germany ultimately decided they needed to step in. They've taken control of Uniper. And to Werner Hoyer's point, we hear that Germany is looking at other troubled companies in the energy sector. So in many ways, this is probably the beginning of many more moves by the German government to come as this crisis unfolds.
So what's been the reaction in Germany?
Well, the German public is obviously very concerned about the energy security here, and there's also something else playing out here, and that is a discussion about a gas levy. The German government is looking at putting in place a levy that consumers will have to pay. So not only will people be paying for this nationalization, of course, through their taxes, but their energy bill is likely to go up significantly as well. So there's been a significant amount of public backlash over all of these moves that the German government is taking at the moment to secure energy in the country.
So, Chad, what's the next timeline we should be watching out for?
Well, we hear that they're likely to move on some of these other companies in the coming days and weeks. The situation is very urgent. Of course, the Uniper deal was super complicated because it also involved the Finnish government. The main shareholder in Uniper was a Finnish company. And so they wanted to move first on Uniper and then look at some of the other parts of the sector that they feel they may have to step in on as well.
Chad, I mean, there's so much, of course, at stake, also with this escalation from Vladimir Putin, which some say, look, this is a sign of desperation. Of course, this also has to do with the referendums in the annexed regions, because once they're from Russia, he can defend them, by nuclear force, which is why he's drafting in a lot of these soldiers. I mean, will that dominate the news in Germany for the next couple of weeks because of the proximity to Russia?
Well, I think it certainly will dominate the news cycle here. People obviously are very concerned about what they see playing out. Of course, Chancellor Scholz right now, he's in New York. He delivered an address to the UN General Assembly last night. Some really forceful words for Russia and for Putin from that address by the Chancellor. And so we expect to hear more from him on this topic when he returns back to Germany at the end of this week.
Thank you so much, our Chad Thomas there in Berlin. Now, coming up, Western leaders, of course, are at the UN General Assembly. They accuse Russia of modern-day imperialism. More on that story next, and this is Bloomberg.
I've always been a person who's just been attracted to hair. I like to sit and think and theorize how I can manifest these visions that I have for braiding and how I can take something that may seem like it's a line drawing in my mind and apply that to someone's scalp.
We are the only culture that has hair that grows out of our head the way that it does. Anyone from the African diaspora is born with this amazingly curly hair that can be shaped into a variety of different ways of expression.
I want Black people to love themselves for how they naturally appear, and also to appreciate the cultural practices such as braiding that our ancestors have practiced for centuries.
Lots happening on Wall Street.
I think Jay Powell said things that were indefensible.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
We think that's the next secular shift.
From businesses most influential and instrumental.
It's knocking it out of the ballpark.
It's a challenging dynamic.
This is a level of uncertainty that we haven't had to deal with.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in New York. This is where the UN General Assembly is happening, and of course a lot of focus on foreign policy because of the escalation in the war in Ukraine by Vladimir Putin. He gave a speech about 2 hours ago. Now, NATO's Secretary General says Russia's plan to hold referenda in 4 territories in Ukraine and formally annex them does not have any legitimacy. Well, Jens Stoltenberg spoke to our Anne-Marie Hordern here at the United Nations.
Such sham votes, referendums, do not have any legitimacy, and therefore they don't change the nature of the conflict. This remains a war of aggression by Russia against the independent sovereign nation in Europe, Ukraine, and this will only further worsen the situation, and therefore we need to provide more support to Ukraine.
Meanwhile, Western leaders told the UN General Assembly in New York that Russia's invasion of Ukraine harked back to an age of imperialism.
Ceux qui se taisent aujourd'hui servent malgré eux.
Those who are keeping silent today actually are in a way complicit with the cause of a new imperialism and a new order that is trampling over the current order. And there is no peace possible here.
The return of imperialism is not only a disaster for Europe, it is also a disaster for our global peaceful order, which is the antithesis of imperialism and neo-colonialism.
The United Nations Charter and the ideals it represents are in jeopardy. We have a duty to act, and yet we are gridlocked in colossal global dysfunction.
Well, joining us now is Bloomberg's Maria Tadeo. Maria, in all frankness, we have all of these impassioned leaders here at the UN in New York, where I am, but Vladimir Putin does not care what they think or say. He wants to annex, of course, those territories, put troops in, because then he can probably defend them nuclearly as well.
Yes, and Francine, if you still believe there was a diplomatic way out of this, if you're Vladimir Putin and you still hoped there was a way to de-escalate and go for a diplomatic venue, then you don't do the kind of speech that he did today, where clearly he's flirting now with something that looks like nuclear warfare. This is something the Western leaders do not want to engage with. They always say no one can win a nuclear war, and this is not a political weapon or a political tool that should be politicized in that way. And then secondly, of course, this is now an escalation on the ground too, where we know that Western leaders will now feel an obligation to further help Ukraine and provide more weapons. That clip that you played from the NATO Secretary General really summed it up very well. The referenda, well, they're fake. They're a scam. We know the way this works. Russia will say a resounding yes of the population agreed to join the Russian Federation, but there is no proof of that. And Ukrainians are going to fight this on the ground. Zelensky was very clear. The counteroffensive will continue.
Maria, could this be a miscalculation actually by Vladimir Putin? We understand that, of course, there could be back channels with even, China, India calling him and saying, wait, what's going on? Do we take seriously the threats of actually following through with nuclear weapons?
And Francine, to me, that is the question, and it really is the question that needs to be answered now. Is this a miscalculation from Vladimir Putin? You talked about China, you talked about India, but we also had Erdogan yesterday who said, I do not agree with the referendums, the way they're being presented, the questions that China says they have around the invasion. And also, Francine, the Russian people. There's a big difference between watching a war, like it's reality TV at home when you watch it on TV, to now being told, pack your things, you're going to fight in Ukraine with a professional army. So there could also be social pushback from Russia, and that is something that is a very risky move for Vladimir Putin himself domestically.
Maria, thanks so much. Maria Tadeo there with the very latest, of course, on Russia. Now, Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller and Kaylee Lyons in New York. Anna Edwards will be in London. We'll have a full market reaction. Of course, it's Fed Day. Treasuries, gold, the dollar jumping on haven flows after President Putin stepped up his war against Ukraine. This is Bloomberg.
Apple's delaying its next major iPad software update, iPadOS 16, by about a month from September to October. Apple made the decision for a number of reasons, including a still buggy Stage Manager multitasking interface and in order to link the launch closer to the more similar macOS Ventura. Still, it's an unusual move. Since shifting the launches to the fall in 2011, Apple has released its new iPhone and iPad software updates simultaneously each year around September. By staggering the releases, users may find some issues around compatibility with cross-device features like retracting and editing messages in iMessage, the new shared iCloud photo library, and the new feature for transferring FaceTime calls between iPhones and iPads. It will also make it a bit harder for developers to launch apps that run on both the iPad and iPhone that require new APIs and features found across iPadOS 16 and iOS 16. Regardless, it was still, of course, the right move. Stage Manager on iPadOS 16 is still quite buggy. I don't find it particularly intuitive, and it's not compatible with most iPads and many third-party apps on the App Store. The feature clearly needs some more polish. And complaints from consumers about Stage Manager will now no longer probably overshadow the earlier launch of the iPhone 14.
The difference between political gossip and policy intelligence. Bloomberg Government provides our clients with expert reporting, analysis, and public affairs tools that give you the edge in reaching policymakers on the Hill. When you're in the business of influence in Washington, information and connections are the currencies on which you rely. For knowledge you can act upon, the difference is Bloomberg Government.
We will never break. We will never break. Build on a foundation strong enough to stay. We will never.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
We are getting into an interesting place.
Things might not be as bad as feared.
I think we're on a collision course here.
The last quarter of this year, I think, is going to be pretty ugly.
I think we're sort of stuck in this purgatory for a while.
We're going to have a very difficult winter in Europe. This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong. Our top stories today. Vladimir Putin vows to use all available means to protect Russia, accusing the U.S. and allies of trying to destroy his country. He calls up 300,000 reserve troops. Investors wait on the Fed. The central bank is expected to raise interest rates today to the highest level since 2008 and forecast further increases. And a showdown today between Congress and the CEOs of the biggest consumer banks in the U.S. Lawmakers want to know how they're helping customers struggling with soaring prices. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lines in New York. And Kaylee, if we thought we'd have a fairly smooth, uneventful run-up to the Fed a little bit later on today, then Russia had other ideas.
Yeah, now you have to worry about geopolitical risk today, not just monetary policy risk around the Fed. So definitely a lot for investors to digest, Anna. And as for how they were digesting everything in Asia overnight, it was pretty much a down day across the board for Asian equities. The MSCI Asia Pacific Index as a whole down about 1.4%, with some underperformance coming from Hong Kong and specifically those tech stocks. Japan was lower as well, though it's less of an equity story for me and more of a bonds and foreign exchange story when it comes to the Bank of Japan. Because take a look at where the 10-year JGB yield is, about 26 basis points. Why is that a problem for the BOJ? Because they want it capped at 25 basis points. That is why they have that yield curve control, and trying to maintain it is why they announced an unscheduled bond buying operation overnight. It'll be a very interesting decision from Kuroda and the team tomorrow. The Japanese yen, while it was receiving a bit of a haven bid earlier on those Russia headlines, now essentially unchanged against the U.S. dollar. And really broadly in Asia, it is a story of dollar strength and weakness on the part of Asian currencies, including the Chinese yuan, despite the fact that for a 20th day in a row, the PBOC set a stronger than expected fixing rate, and yet the Chinese yuan weakening once again against the dollar. We are at 7.06, Matt. That is something we have not seen going all the way back to the summer of 2020.
I'm just happy I'm still making money on my Japanese short JGB carry trade this morning. Take a look at what's going on in U.S. markets. You likely not see a lot of movement in risk assets like S&P futures right now. Very little changed. Of course, we tend to see traders, and I say this so often that I feel a little sick saying it again, but sit on their hands on such a big Fed decision day. You also don't see a lot of movement in the 10-year yield. In fact, it has come down. We went up to 356, 357, I think, at one point yesterday. So after we broke through 350 for the first time since 2011, that yield has continued to rise. The 2-year yield rose up to, I think, 399 at one point, but it didn't make it to 4. So we're still watching these things, but they're not doing a lot ahead of the decision as traders want to get neutral into that time. NYMEX crude is coming up $1.50 a barrel to 85.44. This will be interesting to watch with the geopolitical risk that Anna and Kaylee were talking about. That obviously puts upward pressure on the oil price, and around the UNGA, you could get even more market-moving news out of this. And then the U.S. dollar index, now at 13.18. This is where traders go worldwide for safety when you've got this kind of geopolitical risk. So as a result, we are once again at an all-time high on the Bloomberg dollar index. Anna, what do you see in Europe?
Yeah, here in Europe then, Matt, we spent the last 2 hours trying to get a sense of the size, the scope, the significance of what we heard 2 hours ago from President Putin. Yes, he was talking about using any means necessary, which sounds very alarming, but then he was launching a partial mobilization, 300,000 troops or so, so not a sort of wider conscription. So the market took a while to get its head around what exactly that means in the short term. And so we saw a great deal of volatility. We did see the dollar gain, and to some extent we've held on to those moves in FX and in commodity markets, but some of the risk aversion moves we saw in stocks have been unwound a little bit. That said, this is what we're seeing in FX. So this is the holding on to those moves that I mentioned in FX. The euro sold off and money went into the dollar as a result of that geopolitical risk, seeing seen as more elevated, I suppose, and the risks of the Eurozone economy then as more elevated. The German 10-year yield reflected that as well. So if we thought we were just talking about the Fed, now we're not, and we do see some movement in bond markets that suggested a little bit of buying of government debt, and so those yields coming off from recent highs, which adds some complication or maybe a more neutral picture in bond markets as we head towards the Fed meeting a little later on. Uniper, this stock has been incredibly volatile, and we now have finally details of the bailout, or rather the nationalization of this business. This is the biggest importer of Russian gas in Germany. They've been bailed out, bought by the Russian government, essentially bought from a Finnish company called Fortum that previously owned it. And just to prove there is other stuff going on, but it really isn't of global significance perhaps, but it will be of interest later in the week. The UK mini budget is coming, and there's talk in the newspapers about whether we might see cuts in taxes on home transactions, on house moves. That's called stamp duty, and that as a result has moved house builders higher this morning in London. Kaylee.
All right, Anna, definitely something to watch over the coming days. As for what to watch on this day, Wednesday, let's take a look at the day ahead. Bank CEOs, including Jamie Dimon of JP Morgan and Brian Moynihan of Bank of America, will be testifying before a House Financial Services Committee hearing on banking accountability. Plus, President Biden delivers remarks before the 77th session of the United Nations General Assembly. The president will also meet with UK Prime Minister Liz Truss. Japanese Prime Minister Fumio Kishida rings the New York Stock Exchange closing bell and will deliver some policy remarks. And then, of course, finally, the big event of the day, the Fed rate decision comes at 2 p.m. New York time, Matt.
All right, we will be watching all of that very, very closely today. But this morning, Vladimir Putin raised the stakes in Russia's 7-month war with Ukraine. In a televised national address earlier, Putin vowed to use all means available to defend his territory. Maria Tadeo, Bloomberg's European correspondent, joins us now for more. And this has to be the most worrying part of his speech, right? Because we're all thinking of the nuclear threat, and he said he's not bluffing.
Well, he says it's not a bluff, that this is not a joke. And just to take a step back, Matt, the reason for this, of course, is that we know there are going to be a number of votes, a number of referenda that will be carried out in some regions in Ukraine. This is straight out of the Russian playbook. You put it to a vote, and then you say there was a resounding yes. 90%, 85% of the people there agreed to join the Russian Federation, excuse me, and at that point it becomes part of the territory of Russia. It's at that stage that Vladimir Putin said today he will have all the rights, but also all the means to protect his country. This is not a joke. It's not a bluff. That was his take on things. But remember, this is not the first time that he floats the fact that Russia has very powerful nuclear weapons. The other issue here that we should mention from that speech this morning is that he does say we are going to need extra manpower on the front line in Ukraine. They're hoping to bring in another 300,000 men in the front line. But Matt, I have to tell you, this says that in some ways, the special operation that was supposed to be going according to plan is not going according to plan. And a lot of experts say even if you try to bring in this man, it could be months before they actually make it to Ukraine.
Okay, so we'll watch for that and how quickly they can arrive, Maria. Clearly, European governments reeling from the early stages of this war still trying to get a handle on the damage being done to European economies. I mentioned the Uniper story. I should have said that Germany, of course, has taken ownership of that business, not Russia. It's because Russia has been turning off the gas taps that Germany and that government has had to step in there. So that's been the European response to now. What about the domestic response to what we heard today, Maria? Could this backfire on Putin? What kind of domestic response do we expect his speech to receive?
Well, Anna, to me, that is the key question, because there is a big difference, and I guess we all can agree on this. If you're a Russian man, there's a huge difference between watching a war play out like it's reality TV on television. You may be proud of your country or not. You may be rooting for the Russian army or not. But then when you get called and say, pack your things, you're now going to Donetsk to go fight a professional army, then you may feel differently. So to me, the social reaction to this, the social pushback domestically, potentially, to Vladimir Putin is a key goal here. And then, of course, we need to wait and see the reaction from countries like China, India, Turkey. How do they take what they could see or interpret as escalation? When it comes to the West today, all eyes on the U.S. president. When it comes to the European Union, it's already clear. They've said they will not accept the results from the fake referendum that they call are essentially fake, phony, and that more sanctions could be to come for the people that play out in this.
All right, Bloomberg's Maria Tadeo, thank you so much. And of course, the ongoing war in Ukraine does pose an upside risk to inflation. And that is something that the Federal Reserve has to think about. It is poised to raise interest rates to the highest level since 2008 today, and it's likely to forecast that there will be further increases. For a third meeting in a row, policymakers are expected to raise rates by 75 basis points. Dennis Lockhart, former Atlanta Fed president, spoke with Bloomberg yesterday on his predictions.
I believe they'll do 75, but I cannot fully rule out 100. I can rule out 50. There is no justification for dialing back at this point. But I really think the highest probability is 75.
Michael McKee, Bloomberg International Economics and Policy Correspondent, joins us from our D.C. Bureau now with more. So, Mike, 75 likely, 100 maybe. Is the question really, though, what comes after this meeting?
That's absolutely the question that everybody is going to be asking. Vladimir Putin is not around the table in Washington at the Fed, but he's certainly clouding the economic outlook. They'll do their best to provide us with their view of the path, however, after that 0.75 percentage point increase is announced. And by the way, that would be the most aggressive rate rise since the Volcker years. So the Fed is really going after it at this point. But it's the dot plot that's going to matter to the markets the most. The June dots were above market expectations, but they're way below now. So how much do 2023 and 2024 dots move up? And what's the peak going to be? We also get our first look at 2025. How long will it be before rates start to come down? Then we also get the summary of economic projections, their view of what the economy is going to look like, and that was all put together before Putin. Should lower their growth figures is the expectation. They were all below the neutral rate already, so those should go lower. The unemployment rate will be going up. How far are they willing to let it go before it gets to be too much? Inflation, how quickly will it come down? Look for those numbers to go down much more slowly. And the first time, of course, for the 2025 estimates, they won't be that accurate that far out, but it gives us an idea of what they think the path is going to be. And of course, finally, we get Jay Powell's news conference, and he's going to try to make sure there's no ambiguity. The Fed is going to stay on this path until inflation starts to come down.
Mike, do we get a sense that the commentary that goes with a 75 basis points move might have to be more hawkish to compensate for the few who expected 100 today?
I think what you'll get is something like Jay Powell in Jackson, where he stays focused on the idea that the Fed is going to raise rates, and they're probably going to raise rates aggressively, if not 75, then by 50 basis points at the next meeting or two, and not try to give markets any reason to think that the Fed will pivot. The markets are already pricing in, or still pricing in, cuts to the Fed funds rate in 2023, and he probably wants to take that off the table.
Yeah, really interesting stuff. We will be looking forward to this meeting. Mike McKee reporting live from Washington. Our special coverage of the Fed decision starts at 1:30 p.m. New York time, 6:30 p.m. in London. Now let's get to a story that has rocked Wall Street. Banks are likely to lose about $600 million after unloading debt for the buyout of Citrix Systems. Investors required significantly higher yields than the banks had promised private equity firms, Vista Equity and Elliott Investment Management, back in January. Shanali Basak, our global finance correspondent, joins us now for more. And this is especially interesting because it probably marks a milestone, at least for now, in terms of raising debt.
There was this grand hope that this deal going through would really start to open the pipelines. I spoke to a senior leader at Apollo last week who said, don't get your hopes up. And you're looking now, and the banks are still holding $6.5 billion of this debt, give or take, and they've offloaded about $8.6 billion, but at a steep discount. And that's according to Bloomberg calculations and market participants, according to people familiar with the deal, led by reporters including Paula Seligson. I mean, it is truly an amazing story.
So what, like 83, 84 cents on the dollar?
Yes, for one part of the deal. Another part of the deal, the leveraged loan, sold at a discount of 91 cents. So yes, still steep discounts, below par. And again, this is not the only deal on the pipeline. So $600 million worth of projected losses for the banks involved. About 30 or so in total were involved, but also not the only deal on the pipeline. So could it close the market for longer and impact future deals? Yes. And could it impact the banks in terms of what they have to mark as potential losses because of those mark-to-market write-downs? Also, yes.
Well, let's talk about the leaders of the banks specifically, because all those big bank CEOs are going to be testifying before Congress today on risk to the economy. We've gotten a preview of their remarks already. How fiery do we expect their exchange with lawmakers to be?
It's a great question because you have two things going on, Kaylee. First, you have the banks stepping up and making their case. In the case of Jamie Dimon, that case was about the higher capital requirements that JP Morgan may face and what that could mean in terms of a tightening economic outlook. Jane Fraser talked about the economy and said it was daunting despite the worst of COVID being over. You have the head of U.S. Bancorp making a case for its acquisition of MUFG Union Bank. They're waiting regulatory approval. But remember, there are different concerns on the eyes of lawmakers, Kaylee, and that includes sparring views in Congress about climate change. It's concerns about the availability of financing for homes, for communities, for mortgages. You have worries about roaring inflation. You have worries about pay and worries about whether pay for branch workers are rising commensurate with what you're seeing in the broader society and relative to the investment bankers that have gotten very large pay increases in the last couple of years. So, Kaylee, there are truly a lot of worries on that horizon. It is bound to be a very interesting thing to see right before the midterms, especially.
Yeah, clearly a lot to talk about on the Hill. Bloomberg's Sonali Bosick, thank you so much. Now let's get back to the markets and take a look at some stocks moving in pre-market trading here in the U.S. And I want to begin with some of those defense stocks, which are getting a lift today because of those headlines out of Vladimir Putin regarding mobilization of Russian troops, one of them being Lockheed Martin, which is up about 3%. You're also seeing broadly a lift in the commodity space, specifically in oil, and that is giving a commensurate lift to the energy sector. The Energy Select Sector SPDR ETF, which essentially gauges how the sector as a whole is going to be performing in early hours, is up about 1.2%. One stock moving lower, though, is Micron. It was downgraded to neutral over at Mizuho with a $56 price target. That chipmaker right now trading at $49.51 in pre-market trading, down about 2.5% before the bell, Anna.
Kaylee, still to come on this program, we'll talk much more about the markets, what to expect from today's Fed decision with Steve Blitz, TS Lombard, chief U.S. economist. What is he watching out for in the rates, in the forecasts, in the guidance, well, the press conference at least, or the dots? More on Putin's call to arms. That also coming up with Elizabeth Braw, who joins us from the American Enterprise Institute, where she is senior fellow. Plus, Ken Griffin takes Miami, why the Citadel founder ditched Chicago for Wall Street South. More ahead. This is Bloomberg.
Material samples brought back from objects in space can shed light on billions of years of our solar system's history, including details about the origin of life here on Earth.
A piece of an asteroid is a piece of the earliest beginnings of the solar system.
But picking up rocks from the surface of an asteroid or planetary satellite isn't as easy as it sounds. It requires voyages of millions of miles to bodies that have never been seen up close. Probes need to land on surfaces with weak gravitational pulls, where the surface terrain is completely unknown, gather samples, and then make the long trip back. And while behemoths like NASA and SpaceX grab headlines, it's a relatively young space agency. The Japan Aerospace Exploration Agency, better known as JAXA, that is taking the giant leap necessary to bring the mysteries of space back down to Earth.
The market Markets are preparing to close, but the day is not over yet.
Stock that is now up about 45%.
A lot of volatility right now.
You need the power of the Bloomberg terminal to get you market-moving data before anyone else.
These numbers are much higher than expected.
Upgraded today to overweight.
You need top analysts to bring you exclusive global insight into cross-asset markets.
The muni bond market.
China is a really big focus.
Bitcoin ain't playing along today.
It's going to be short term.
Bloomberg Markets, The Close. Weekdays on Bloomberg.
This is Bloomberg Surveillance Early Edition. We are simulcast on both Bloomberg Radio and Bloomberg Television. I'm Matt Miller here in New York with Kaylee Lyons, Anna Edwards with us out of London. We are looking at a Fed rate hike that'll likely be 75 basis points today. I've got a screen here that shows the odds of a 100 basis point rate hike coming back down now to only about 18%. The odds of a 75 basis point rate hike next month, or wait, in 2 months, in November, up to 75%. So the market is betting on 75, 75, and 50, basically. This shows the odds of a 50 basis point rate hike in December at 60%. Joining us right now from Paris is Bloomberg's senior markets editor, Phil Serafino. And Phil, I didn't know whether I should kick it off with the Fed or with Vladimir Putin, because if he's going to use any means necessary, the market may be more concerned about that than Jay Powell raising rates.
Yeah, you might think that, Matt, but it was pretty surprising when those headlines moved this morning about Putin's speech. There was a bit of a blip down in the markets, and then they just stabilized very quickly. I think the rhetoric was probably not a huge surprise to a lot of traders, but people are very focused on this Fed meeting. It's really going to set the tone for the market.
Focus on the Fed meeting, Phil, and focus very much on the dots, we understand, and what they tell us about how long these interest rates are going to stay high for.
Right. I mean, the market is set up at this point now for a 75 basis point increase. If we get that, and there are some signs from Jay Powell that, you know, he's backing off a little bit on the hawkishness, that might set the market up for a relief rally. You know, the scenario that Matt just outlined there, 75, 75, 50, that seems to be baked in at this point. And there's still a glimmer of hope. I think Mike McKee mentioned it earlier that the Fed might be cutting rates next year. And so the tone that Powell gives today is going to be very important. You know, the market has come down from the mid-August peak. People have started to realize that inflation is really almost getting out of control. And the Fed may be behind the curve. Any sign that the Fed can give that, no, things are under control and we're getting towards the end of this hiking cycle, the market would welcome that.
Phil, thanks very much for the update. Bloomberg's Phil Serafino on the markets. And for more market analysis, check out MLIV Go. That's the function to use on your Bloomberg terminal. This is Bloomberg.
For a young person who might like to have a career like yours, what would you recommend?
I think actually sometimes saying, you know what, I was wrong, you were right, is actually a more powerful show of intellectual strength than just sticking firmly by your position.
When you think of cutting-edge technology at sea,
You might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
From New York City.
In London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
So recap the headlines.
You do not want to miss this
How
story.
are you thinking about those dynamics?
The difference between missed opportunity and actionable intelligence. For in-house attorneys who strive to provide superior counsel and strategic advice, Bloomberg Law offers an unmatched platform of analytics tools and business intelligence. All to help improve productivity, mitigate risk, and inform decision-making. For the comprehensive platform that helps you work smarter and faster, the difference is Bloomberg Law.
Now keeping you up to date with news from around the world, here's the first word. The special master in the Donald Trump documents case is skeptical of some of the former president's arguments. Federal Judge Raymond Dearie pushed back on the Trump lawyers' position that they didn't need to detail any alleged declassifications of highly sensitive records. He said the Justice Department had presented evidence that several of the documents were classified. The Bank of Japan is trying to cap upward pressure on yields before a policy decision later this week. The central bank announced an unscheduled bond buying operation. BOJ Governor Kuroda has emphasized his determination to maintain rock-bottom interest rates, even though many other developed nations are increasing them. And speaking of, ECB President Christine Lagarde says borrowing costs will rise more in the months ahead. Speaking in Frankfurt, she said the ECB has taken major steps to tackle inflation, and she expects to raise interest rates further over the next several meetings. And the Federal Reserve, too, is expected to raise rates by 75 basis points today. We'll discuss that coming up with Stephen Blitz, T.S. Lombard, chief U.S. economist. This is Bloomberg.
Nurturing also can come from men, and it's one of the qualities, I guess, that you found in your mentors that also pushed you up. Do we need even more nurturing post-pandemic? Is the way that we talk with employees going to change?
I think talent becomes the single biggest differentiator of a successful entity versus an unsuccessful entity. So you've got to do everything possible to hire, train, retain, put your arms around talent. I mean, you've really got to focus on your talent. In the past, it's always been give them money, show them that they have an upward mobility and can make even more money, and that's the only reason people come to work. I think post-pandemic, we are seeing more and more people say, I have to worry about me as a person, I have to worry about my family, I want to worry about my well-being, my mental health. So we've got to start encompassing people as holistic humans as opposed to a tool of the trade, which means that we have to engage with them head, heart, and hands, not just head and hands. The heart has to be engaged. So we have to show more empathy, show that we care, that they're citizens of the community, they're members of the family, and all of those have to come into consideration as we help an executive or an employee be an employee and be a person of the community and the family. The stakes are higher.
From the world of politics to the world of business. Balance of Power with David Weston. News, analysis, insight from and about politics power players. Weekdays. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. Vladimir Putin vows to use all available means to protect Russia, accusing the US and allies of trying to destroy his country. He calls up 300,000 reserve troops. Investors wait for the Fed. The central bank is expected to raise interest rates today to the highest level since 2008 and forecast further increases to come. And a showdown today between Congress and the CEOs of the biggest consumer banks in the US. Lawmakers want to know how those banks are helping customers struggling with soaring prices. I'm Anna Edwards in London with Matt Miller and Kaylee Lyons in New York. And 2.5 hours ago, Matt, we were listening to President Putin's recorded message talking about troop mobilization, talking about any means necessary, and risk assets really sold off. But to a large degree, certainly stocks have clawed back some of those losses, even if some other assets remain focused on those developments.
Yeah, absolutely. I mean, as Phil Serafino just told us, markets have stabilized pretty quickly after those Putin remarks, to the point where it looks like a pretty normal Fed day on U.S. futures. We see very little change here, so traders don't want to do very much. And we've already heard that they have cleared their shorts and cleared their long positions as well, gotten neutral in markets ahead of this decision because anything could happen. Although, really, in terms of the rate increase, everyone's betting on 75 basis points. 10-year yields are not really moving now at 354. We rose all the way up, I think, to almost 360 in yesterday's session, and the 2-year yield almost to 4%, to 399. But both have come down a little bit since then, and we're looking at, again, some stabilization here. NYMEX crude is still up, and now 86.08. This is one of those assets that I think really can be strongly affected by geopolitical events, especially out of Russia. So that's feeling the upward pressure from Putin's remarks. 86.15. This is for Texas Intermediate, but of course Brent shows very similar moves, more than 2%. And the Bloomberg U.S. dollar index as well. At 13.17, we're back up to all-time highs for the dollar index, and you can see that strength if you look at, for example, the euro or the pound this morning. Kaylee, what do you see in terms of the pre-market movers?
Well, you mentioned the lift we're seeing in oil prices on the back of those Russian headlines, and that is translating directly into a lift in the energy sector. Names like Marathon Oil, Occidental Petroleum, each up the better part of 2% before the bell. And also you're seeing defense stocks getting a boost here after some of that more aggressive rhetoric from Putin talking about any means necessary. Once again, we're weighing the potential of any kind of nuclear weapon possibly being used. And as a result, the likes of Lockheed and Raytheon are getting a boost. They're up 2.5% and 2.75% respectively in early hours, Anna.
Let me focus on what's going on here in Europe then, Kaylee. And just as you're seeing some pre-market action in defense names, we've seen that in some of the defense names in Europe. Also, the energy names moving higher. That works to the advantage of the London market, Italy getting some of the benefit as well. And so what was a negative start to European trading with those words of Putin, that geopolitical tension and risk ringing in the ears of investors, was turned around into a gain right now of 0.3% as we head towards another focus later, and that is the Fed. Here is where we've been hanging on to a little bit of the reaction to Putin, though. The euro was lower than this, but it still does show a little bit of weakness as a result of Putin's comments, down 0.5%, because, of course, many put together further threats to the Ukraine situation and what that does to the European economy. The German 10-year yield in focus as well. We've seen yields, of course, on the rise of late. That's been broadly, globally, very much the trend. Today, we saw something a little different just on the back of those Putin comments, a bit of bond buying coming through, yields coming down, but only at the margin. Uniper, of course, a very early victim of the tensions between Russia and the West. As Russia dialed down the amount of gas it was prepared to send to Europe, then Germany's largest importer of gas was up against it and had to pay spot prices. They've now been bailed out by the German government taking on ownership of this business now from a Finnish business called Fortum, which previously owned it. Kaylee.
All right, Anna, well, let's go back to the conversation around the Federal Reserve with that decision coming up at 2 p.m. Eastern Time. Stephen Blitz, T.S. Lombard, chief U.S. economist, is joining us now on set here in New York City, up early for us on this Fed day. The market's pricing in 75 basis points. Hawkish is where expectations are. How could the Fed possibly exceed those hawkish expectations today?
Well, they could raise 100, right?
What do you think the likelihood of that is, realistically?
Well, pretty small. I mean, I think they should do it, but they probably won't. They would have already signaled that they did the last two meetings, you know, on the weekend before if there was going to be something different. So I suspect it'll be 75, like everybody else does. It's all about the forward guidance, right? And I think it'll be a little bit less dovish in the forward guidance this time. It's an odd game that the Fed is playing right now, all central banks really, right? In that usually the funds rate is moving in the same direction as inflation. But everyone knows that inflation's going to be coming down to some level, right, as supply chains, all these things normalize. So if you think the inflation rate's going to drop down to 3%, then suddenly 3.25, 3.5 is just fine. The message of the August CPI data is that that's a little optimistic. And that's why we went from 3.25 to 4. And if they delay through the course of this year in getting up to a high enough funds rate, next year it'll be 5.
Well, the market narrative, I'm not sure if it's the market narrative or the media narrative, seems to have shifted. At first, they're not doing enough. They need to fight inflation, raise rates further and faster. And now they're doing too much. They're going to kill the economy. Unemployment is going to be horrendous. I mean, why do you think that shift happened? And is it going to change the way Powell behaves?
No. And I think that, you know, how the media shifts, you guys can answer this better than I can. But I think that the
well, we heard, for example, from Dartmouth professor Danny Blanchflower that the kind of unemployment they'll create with these rate increases is going to be worse than the kind of inflation that we're worried about now. Do you disagree?
Well, it's a good point. But that's a difficult point to argue. And the fact is that, they're looking at a very high inflation rate. They're looking at an unemployment rate of 3.5, 3.7. They're looking at nominal wage growth at 7%. They're looking at for job switchers at 8.5.
Now. But policy has a 6 to 12 to 18 month lag, right?
Long variable.
It's long and variable lags. You're right, but some years this is a very different cycle, right? Because it's built. They're trying to reverse an asset cycle as opposed to a credit cycle. So all these other bromides are always go back to times when the Fed raised rates, it curtailed lending, curtailed borrowing, an economy running on leverage suddenly had to reverse itself. You don't have an economy running on leverage in that same way, so really you have to quash the asset side of people's balance sheets, and how far does that have to go before you really start to change behavior?
Steve, good morning to you. So you have to quash the asset side of the balance sheet. Maybe you have to quash the economy through unemployment and growth as well. I mean, what kind of tolerance for unemployment and weak growth do you think the Fed will indicate?
Well, I don't think they'll indicate a number, and that's why they've been very soft in terms of how they've been talking about this. But I think that my general feeling is that after 4.5%, the Fed will start to take notice in terms of its policies. I think that, personally, I think that the unemployment rate is going to get up to about 5.5%, 6% before all's said and done. And it's terrible, and it's always terrible, especially for the people who are unemployed. Sometimes economists talk about these numbers in a very abstract way, but, we're talking about real people and real lives.
Yeah.
But, 5.5%, 6% is really not that bad a recession from going back to the economist at. And, at 4.5%, they start to take notice. But, he told us very clearly there's going to be pain.
Yeah.
And the only way in which they can slow this economy down, remember, this is the first time since the 80-82 recession where we have the inflation rate so far above the unemployment rate. It's been the other way around. And you can't get and we know that the inflation rate's going to drop back down towards the unemployment rate at some point, but the message of the August CPI is that this core inflation rate is not just going to melt away.
All right, Steve, great to have you in the studio this morning. Thanks so much for coming in and joining us. Stephen Blitz there of TS Lombard. Coming up, we are going to discuss Putin's escalation in Ukraine with Elizabeth Braw, American Enterprise Institute Senior Fellow. This is Bloomberg.
CEO Mark Rowan. In January, Apollo closed its $11 billion all-stock merger with Athene Holding. It had already owned 35% of the insurer. Here's what Apollo gets out of the deal. Assets under management. Apollo expects them to double to about $1 trillion by 2026. Much of that projected growth will come from the merger, and those assets are especially attractive to Apollo. Insurance companies typically go after much more modest returns than buyout investors. That will give Apollo more options for investing the cash. Athene is a steady provider of fee income. It has grown into one of the nation's biggest holders of fixed annuities, those retirement savings products favored by risk-averse customers. The merger will also allow Apollo to simplify its governance. It gave up its dual-class share structure and adopted a one-share, one-vote plan. The hope is that will eventually lead to Apollo's inclusion in the S&P 500.
Policy, politics, from the White House to the Hill, Bloomberg covers the leaders in legislation.
That was really a tectonic shift for this White House.
The theory of this bill, as I understand it, is there'll be a multiplier effect.
How did Democrats mobilize specifically younger voters?
Bringing you the political news you need to know.
The president has made it very clear that this is a significant focus.
For the intersection of Wall Street and Washington, nobody covers politics like Bloomberg.
Ukrainians aren't concentrating their soldiers and armed vehicles in big World War II style formations necessarily. They're fighting in smaller numbers. So where are you going to drop the bomb? Are you going to drop a bomb on a Ukrainian city? In which case, I think even the tentative support that Putin has from the President Xi of China and Prime Minister Modi of India, who's still buying Russian energy, I think you'd see even those guys putting up the red card and saying, I think enough is enough.
That was the view of Samir Puri, a senior fellow at the International Institute for Strategic Study, speaking to Bloomberg moments before Vladimir Putin's speech. Putin has vowed to defend Russian territory by using all means at its disposal. We just heard the guest there reflecting on what that could mean and the limitations on what that could mean. Could it mean that we're talking about including the nuclear arsenal here? Joining us now for more is Elizabeth Braw, American Enterprise Institute Senior Fellow. Elizabeth, good morning to you. Thanks for joining us. So, of course, any means necessary was the phrase that stood out to a lot of people who are trying to work out how significant these statements from President Putin might be. How did you interpret that phrase?
I think it wasn't altogether surprising that he would try to escalate, basically to frighten Ukraine and especially to frighten the West. He doesn't have very much leverage left. The main thing he has is the Russian nuclear arsenal, which is one of the two biggest ones in the world, the other one being the American nuclear arsenal. So it's something that you can always use as a threat if you can't think of anything else. And clearly at this point, he can't think of anything else because he has proven in negative terms in Ukraine that his Russia's conventional fighting force is less good than he thought and than the rest of the world thought. So it's really a sign of desperation.
I love the scene, the beginning scene in War Games, Elizabeth, the classic Matthew Broderick, Ali Sheedy film, where I guess the president orders a nuclear strike, but the actual soldiers in the silo refuse to turn the keys. Does Russia have some similar fail-safes, or could Putin just launch nukes himself?
Every country with nuclear weapons has a sort of a chain, a sequence of events that needs to happen. So it's not like Putin can turn the ignition key, as it were, just as Donald Trump couldn't turn the ignition key, as it were, when he was in charge. That was sort of a threat that friend and foes in America and abroad I think used too much. It doesn't work like that. It's a sequence that needs to happen, and that sequence includes high-ranking military officers. And even though Russia's highest-ranking military officers haven't exactly displayed independence of thought in this war, if Putin were to want to launch a nuclear attack, that's where they would say this is enough, because it would mean that Russia would be attacked back. They don't want that.
Well, on the point of people turning away from Vladimir Putin, what kind of domestic blowback could he be facing for drawing on more troops to bring into a war, physically a war that many people to this point have just been watching on television?
That's right. I think that's the key point of where we are now. The fact that the Russian population could turn away from him, and the Russian population on one hand, and senior officials on the other hand, and both for the same reason, because now Russia is being inconvenienced by this war. Until now, it has been something that was playing out in another country. They didn't have to suffer much, really, at all, apart from the Western companies that have left Russia. But if there is now going to be a partial mobilization of these 300,000 reserve officers, these are people who, these are 300,000 people who are now being massively inconvenienced. That's a large chunk of the population that will then say, this is not really a good idea anymore, this war. So those people themselves, their friends and relatives, their acquaintances and people around them, and at the top of the chain, senior military officials.
Of course, we're talking about reservists at this point, so people with military experience, but we'll wait to see whether that call-up might go further, Elizabeth. President Putin's aims, he says they have not changed in Ukraine. Clearly, all of the action, though, right now, all of the focus is on the east of the country. What do you think he would want to see out of this conflict now? Do you think he has moderated his expectations, as unacceptable as those moderated expectations might still be to Ukraine?
Yeah, it's interesting, Anna, is it not, that when Russia launched the invasion on the 24th of February, the goal was regime change. Clearly, that's not going to happen. And I think a logical or realistic calculations in Russia would now include scenarios like Russia being able to keep some territories that it has captured and kept, which is why we're seeing these referendums being announced, sham referendums clearly, but nevertheless referendums where the local population will inevitably vote in favor of joining Russia because these are sham referendums, and then Russia will be able to claim that it achieved a significant goal, which is the incorporation of certain key Ukrainian parts of Ukrainian land into Russia, and that could be sold as a significant gain in this war, based on which Putin could then declare that it's mission accomplished and we will retreat.
Which would be interesting in itself. Elizabeth, thank you very much. We'll see how those referenda play out and how Russia chooses to use the results. Elizabeth Braw, American Enterprise Institute Senior Fellow. Coming up on the program, we will turn back to the States. We'll turn back to markets, betting billions on Wall Street South. Why Citadel founder Ken Griffin is all in on Miami. This is Bloomberg.
Nutrigenomics and precision nutrition is one of those rare scientific fields that overlaps with the Instagram-friendly wellness industry.
There is a lot of interest in this idea of personalized nutrition, and especially how accessible it is to the public. You can go on Google and type personalized nutrition or diet and genes, and you will find dozens of different companies that offer this nutrition precision tests.
One of those companies is Routine. Routine claims that their personalized tests stemming from sciences like nutrigenomics make their supplements different. But even with the claims from Routine, as well as dozens of other personalized nutrition companies, the science still has a long way to go.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller with Kaylee Lyons in New York and Anna Edwards in London. Tom Keene is back in New York from an extended stay in London and ready to lead our special coverage of the Fed today. So, Tom, what's your single best chart? What are you focused on?
I've got about 5 best charts for this morning. I thought I'd keep it simple and look back to Anna Edwards London here as well, and it's a second derivative of pound sterling. This is called convexity among the fancy people, and all you need to know is it's like putting your foot on the Ducati, Matt. This is the acceleration of sterling down. This is back way before Brexit. Brexit with the red mark over on the left side of the screen. Down we go. And on that regression pre-Brexit from this peak of sterling 140, we've got an acceleration towards weak pound sterling.
All right, Tom. Well, on this Fed day, clearly you have lots of hours of coverage ahead of you. On your 3 hours of surveillance, who are you going to be speaking with?
Well, Global Wall Street, we start strong. We are thrilled to bring you to begin our coverage Dominic Constam of Mizuho. He will join us here within, I think, 9 minutes. And then on to Peter Hooper of Deutsche Bank. They were way out front on calling for recession. On the bear market, he has absolutely nailed. Michael Wilson of Morgan Stanley later in the morning.
All right, Tom, we are looking forward to the coverage. Thanks so much for joining us. Tom Keene, up next on Bloomberg Surveillance. I want to get now to a story that really blew me away this morning. Citadel founder Ken Griffin is the subject of today's big take after moving his family and financial empire to Miami from Chicago. The billionaire has the U.S. presidential race in his sights. Amanda Gordon here to explain after speaking with Griffin and penning this fantastic story. It's great to have you here on set. I feel like we're rewinding in some ways. The story made me so excited for Miami. Of course, other people have been concerned about it. Tell us about it.
Well, Miami is a young city, and unlike Chicago and New York, which has ages of a social structure and is more rigid, Miami is very open and decentralized. So the people that I spoke to said both that they're welcoming Ken Griffin and so excited for the opportunity, but they're also savvy. This is a young city that sees other older cities facing threats, and it is trying to be innovative and direct about taking those head on, like putting in pumps so that when the water comes over with sea level rise, the streets will empty out from flooding, very quickly. So it's a dynamic situation. The big take, though, is that Ken Griffin coming to Miami, it's different than all the migrations we've been hearing about throughout the pandemic.
With $30 billion.
Yeah, exactly. He is competitive. He has his sights set, as you said, on the presidential race, on politics. He sees being able to help Miami move forward as a step in helping America stay competitive.
Well, and he says he wants to go big there. I mean, how great is the mismatch between his expectations of what he's going to be able to do in Miami and what reality actually is?
Well, someone said to me as I was reporting the story, oh, it's like he's doing a cannonball in one of those Miami swimming pools. And I think that he's mindful of this. In my interview with him, it was clear that while he said he wants to listen and understand and not pounce and pretend to know what Miami needs, he knows that he has the wherewithal to figure it out and a staff to look at philanthropic opportunities, to look at infrastructure and education issues that are coming up, especially with widening income inequality. I think that he feels prepared to take it on, and he's looking forward to the partnerships that he might forge.
Yeah, we're not sort of in, we're all in, he said in the interview with you, Amanda. Let me ask you, though, about where this leaves other cities in New York, because we refer to this as the Wall Street of the South, the Wall Street South. I mean, is Miami's gain New York's loss, or how should we think about that?
Well, in the next few weeks, Citadel and Citadel Securities will be filling in the tower where they are the anchor tenant at 425 Park, which is designed by Norman Foster, and I had a chance to take a look at it a couple weeks ago. It is a fantastic building with beautiful sight lines, very high ceilings. I think that Ken actually feels that this is not this is not Miami versus New York versus Chicago or anything else. In fact, Citadel has more staff in New York than they do in any other city. He wants New York to succeed. He knows that young talent loves to be here. He loves the city himself and has supported things like the Museum of Natural History. So I think we'll be seeing a healthy presence for Citadel here as well as Miami.
Okay, he's supporting Miami, he's supporting New York. He doesn't mind where you are in either as long as you're in the office. Amanda, thank you very much. Bloomberg's Amanda Gordon bringing us the latest on that big take story. A fascinating read on the Bloomberg terminal and on the website. That is it for Early Edition. More surveillance is ahead. They are, of course, building up towards that Fed decision, thinking also about the geopolitics. This is Bloomberg.
So you've built a successful company, but you might not want to run it for the next 10, 15, 20 years, or do you? And if you didn't, would you want to go into government? If the president called you to serve our country, would you go into government, or would you start another company?
I love what I do. And I feel like I have this luxury with 23andMe that it keeps evolving. You know, we started out just as a consumer company. We're thick in research. We got into drug discovery in 2015, and now we're getting to the delivery of care. So I've been really lucky with 23andMe that it's been endlessly interesting. And I'm surrounded by incredibly talented, brilliant individuals where I learn from them. And what I always advise people to do is, like, you should take jobs where you're learning. And if you stop learning in a job, then you should quit. And, like, frankly, when people leave 23andMe, like I say, if you're not learning anymore, you should move on. So I'm 100% committed to 23andMe. That said, my other passion is other direct-to-consumer. Like, I want to build out a true consumer-empowered healthcare world, like one that is outside of the existing system. And there's no greater force than government.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
We're going to see tightening through the back end of the year, into the middle of next year, and then quantitative tightening, QT, continues in the background.
It's unsustainable to have the Fed hiking rates at a very rapid rate, doing QT with the economy slowing.
There is some thought that we're getting to peak hawkishness, but that's not going to move the market now.
The bigger risk and tail risk aspects are going to be really European energy crisis and how midterm elections go this year.
I do think the slowdown could be more significant than many economists are expecting.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
It is Fed Decision Day Wednesday, live from New York City. For our audience worldwide, that's not going to catch on, is it?
Not at all.
Okay. Good morning, good morning.
Add some more syllables in there.
This is Bloomberg Surveillance, live on TV and radio, alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Futures up TK, a third of 1%. We're looking for another 75 basis point hike later on.
Market's very dynamic into this decision this afternoon. We're going to start strong with Dominic Constam here in a moment. John, the FX market says it all, but I'm sorry, I'm going to push it aside for the real yield. Everyone out there noting that finally the real yield matters.
Can I get to Japan flying solo straight off the top? The 10-year bond of Japan, Tom, hasn't traded for 2 days for the first time since 1999. Before we get carried away with the Federal Reserve, the Bank of England, the S&P tomorrow,
yeah.
The BOJ's going nowhere, it seems.
Well, they're going nowhere. 143.90 on yen, and maybe it ought to be at a 1.5 to but everybody's afraid they're going to act to make yen stronger. What it really speaks to, John, is what shifted in the last few days. And I'm sorry, this will infect the press conference this afternoon. EM gives way more than the major pairs here against dollar. That's got to get everyone's attention at the press conference.
It's got our attention already in a massive way. Lisa, the amount of work this Fed has done in such a small amount of time. Fed funds has gone from the middle of March at about 0 to 6 months later, basically at 3%, a little bit later on once they're done hiking 75 basis points. We went from the end of 2015 at 0. 3 years later, we got to 2.25% on Fed funds. Just think about how much it took last time, over 3 years to get there, and this time about 6 months to do even more.
So are we there yet, right? I mean, I think that's the question. People are going to be looking for some kind of answer. How high are they going to go? What's their dot plot? People are going to be looking at that, even though inside I cringe and feel like this is a completely moving target and doesn't give you any real information. But nonetheless, people will be targeting it, and it will be guiding the markets post-Fed meeting. But how much can we talk about a 4.5% Fed funds rate, a 4.75% Fed funds rate, as we heard from Bob Michael on your show yesterday with JP Morgan Asset Management?
Bob was fiery.
Yes, he was.
4.5 treasuries.
Yeah.
He's talking up 750 basis point spreads, and he's basically saying, wait for the recession. Have patience, we're not there yet, wait for it. Until then, big cash position.
What's interesting to me is he flicked at the divergence within his own team when it comes to credit, when it comes to the fact that you're finally getting yield, to Tom's real yield point, to the fact that you're getting 8% on credit. He's saying, just wait, right? To your point, John, it could go up to 12% because we have not baked in a recession. And this really shows how difficult this situation is for investors who really haven't seen this scenario for decades.
He talked about a generational divide within the bank, Tom. He said that the people that had lived the 1980s on the trading floor had a very different opinion about where this was heading compared to the people that joined the bank coming out of the financial crisis.
John, it's like BitDog. I strongly agree that there's a generational memory here that a lot of people don't have. It's new territory for a huge percent of our viewers and listeners.
Let's get into this market right now. Futures up by about a third of 1% on the S&P 500. On the Nasdaq 100, up a tenth of 1%. So many messages this morning about Fed day performance. Over the last 18 months, this from the Bloomberg team, the S&P 500 index has risen after 8 out of the last 10 Fed decisions. Lisa, I think a lot of people are aware of that now, and I wonder what that means for the Fed day performance today.
Yeah, I wonder if people are going to look past this one to perhaps half a month after, which tends to be quite different, considering that people usually take 2 weeks to really understand what Fed Chair Jay Powell actually says, because usually he's come out with hawkish proclamations, and people don't adjust until they realize, oh, wait, they're serious about it. So we're going to get something of the same today. At 10 a.m., here's what I'm watching. Bank CEOs, including Jamie Dimon of JP Morgan, Brian Moynihan of Bank of America, as well as others, are coming to Capitol Hill to testify before the House Financial Services Committee. A lot of this guess we'll be trying to get some sound bites for different advertisements for different political candidates, but how much do we get a real assessment of how much inflation is biting into the average consumer? We are going to hear a lot of questions about inflation. How much do we get a sense? Yes, of course, the politicians are going to ask the banks, what can you do about this? But how much do they give a sense that really there is hurt that is spreading more rapidly than perhaps the real-time or lagging data really is capturing? Today is day 2 at the UN General Assembly. I will not call it UNGA. I really agree with you, John, and I actually was struggling with this. Tom, you missed this. We were discussing UNGA and whether that's an appropriate denomination for, you know, I kind of agree. President Biden is speaking at 10:35, and he's meeting with UK Prime Minister Liz Truss at 1:15 p.m. What did you call it? Icy? It's going to be frosty. Yeah, it's going to be.
Maybe.
There's some
I've got
issues.
no idea. I'm just suggesting it might be.
They're dealing with certain issues having to do with Northern Ireland and a couple of other issues. And of course, her plan that she's unveiling isn't necessarily ingratiating her with a lot of economists, certainly locally in the United Kingdom as well as here. And at 2 p.m., there is an FOMC rate decision. I hear it's FOMC rate decision on Wednesday, followed by a press conference with Jay Powell. Real yield, yes, but the dollar dynamics are really telling. And John, we're seeing the dollar strengthen to the most going back to 2002. Yes, this is a Europe story with the European situation getting a little bit worse, at least in the perception of the FX market. How much does this cause real disruption? And I'm going to be focused on that.
What a chart. Lisa, thank you. Appreciate it. Joining us now, just a fantastic lineup today, and it will climax with former Vice Chair Rich Clarida a little bit later. We can kick things off with Dom Constant right now, the head of macro strategy at Mizuho Americas. Dom, at the epicenter of your work, you're expecting inflation to fall and fall so much more quickly than people expect. Dom, why is that your position?
The main thing on the inflation side is that you have profit margins that expanded through COVID and are still very, very high, which means all of the cost inflation has actually been passed through into prices, and then prices have gone up even more because of that expansion. And you can break it down in the GDP data and show that for 10% inflation, about 4% or so is cost, and about 6% is due to profits actually expanding. So that actually means a soft landing is actually still likely because companies can sort of cut back on those profits and still bring down inflation without necessarily having to fire people as rapidly as you might otherwise think. And what they end up doing is they end up tolerating very weak productivity, relatively strong employment. You can still get lower inflation, and it's a soft landing. Ironically, though, it's just a bit tougher to get inflation down. You need to work on, obviously, tightening financial conditions and raising real interest rates. And that's kind of where we are now.
If all central banks are ex post by definition, what is their most efficient, best policy given the stochastic nature of up inflation and then sharp disinflation? What's their best practice right now?
I mean, it's tough. It's partly in the US, for example, the housing market, obviously, a lot of people have locked in interest rates. Okay, they're not going to be moving house, but, the interest rate impact on slowing spending when also there wasn't very much equity extraction in the first place just makes it all very tough. I think it will take time. I think time is probably what you need. And the Fed is finally only just really moving through the neutral rate now and getting restrictive. So I think the message from the Fed is policy rates and real rates, yes, those are the things they need to get up, but they have to keep them there, which is kind of the message. So it's not really a story about zooming them up aggressively and then reversing. It's more a story about getting to a steady level of restriction and just being patient and trying to convince people that they're taking the medicine for their own good, and things will at some point normalize.
Dom, how lonely do you feel in your soft landing call right now?
Very good, actually. Soft landing doesn't mean the Fed doesn't have to raise rates and doesn't have to maintain rates, and the curve could stay very inverted for a while. What it means is that the employment losses, if you like, are somewhat capped as inflation comes down, and so you might well see unemployment rise to 4.5%, 5%, maybe even 5.5%. But in the end, inflation really ought to come down quite a lot. It doesn't mean you have to take unemployment significantly higher and unravel everything that kind of was achieved in the post-COVID period.
Well, I was just wondering how much pushback you're getting and whether you think that a hard landing, whatever that means, maybe higher unemployment, maybe negative GDP growth, whether that's baked into equities and that you should go long risk because you have a more optimistic view than the rest of the world.
Well, I think the hard landing story kind of links to very deep losses in real GDP, and obviously a very sharp increase in the unemployment rate and a kind of collapse in profits. So the soft landing still gives you a very weak GDP, maybe not as weak. I mean, you could be bumbling along zeros and small negatives. You just don't get the big increase in unemployment. You just get the very bad productivity growth on the back of it. And profit margins are the main thing. They come in, but I always look at operating earnings and say, look, if in the peak they might have been over 200, they're going to trend is like 180. They come down towards trend, but a hard landing they'd come much lower. So it's not great news for equities, but it's not a complete disaster. Is the way I'd put it. And financial conditions, are going to stay tight for a while. So it's going to be a bit frustrating. So there are nuances to the differences between hard and soft.
Dom, thank you for joining us today. Dom Constant there of Mizuho Americas. Brammer, I imagine that Chairman Powell's address in the news conference won't sound anything like what we just heard in the last 5 minutes.
Probably not. He's going to talk about the need to get rates higher, that they're not that close. They're going to keep going. They're perhaps halfway there, perhaps less than halfway there, depending on whether you're JP Morgan Asset Management, or perhaps more than halfway if you're taking a look at some of the pushback that they're going too hard. He's going to have to come out and be hawkish, otherwise massive undermining in credibility.
And bearish on the economy, potentially. Chairman Powell talked about the pain in that Jackson Hole speech. Tom, I went back over it last night. And in that paragraph, those couple of sentences where he talked about pain, I just wonder if it's captured by the forecast today, because in a previous round of forecasts, it wasn't really at all.
I never look at the forecast. You know, John, I don't believe in the dot plot. This time it matters. I make an exception. The forecast, and Michael McKee will break that down. It really matters.
Hold on a second. Are you going to be looking at the dot plot, Tom?
No, I'll be looking at the forecast.
News.
I will not be looking at the dot plot.
Okay, so that doesn't matter still.
Which I consider a huge mistake. But, John, the forecast today really mattered.
I'm proud of you, Tom.
Thank you.
Just for opening the summary of economic
Can I just
projections
tell
when they
you,
come out.
you're so on Unga, it's disgrace. And it reminds me of the Blue Swede redo of B.J. Thomas, Hooked on a Feeling, 30, 50 years ago, where they open up Ooga Ooga,
I've got no
Ooga
idea.
Chaka,
Oh,
Ooga
yes. You know what
Ooga.
he's talking about.
I can't believe the team made that banner.
I'm not gonna Ooga Chaka Ooga.
Can you really
Ooga.
not believe that?
Sure. Are you going to sing
Deep
us out?
inside of me. Yeah, Unga's a disgrace. It's the United
agree.
Nations General Assembly.
Well said, Tom.
Thank you.
That's what I said yesterday too. It's good to have you back. Futures up 0.2 from New York. This is Bloomberg.
Tom Keene back in full force. Keeping you up to date with news from around the world. With the first word, I'm Lisa Mateo. Vladimir Putin declares it a fight to the death with the U.S. and its allies. He is calling up 300,000 reserve troops in a major escalation of the war in Ukraine. Putin also hinted at the use of nuclear weapons. He said that the U.S. and its allies want to destroy Russia. A Ukrainian counteroffensive in the last few weeks has dealt Russian troops their worst defeats since the early months of the conflict. The Federal Reserve is poised to raise interest rates today to the highest level since 2008, and it's likely to forecast that there will be further increases. For the third straight meeting, policymakers are expected to raise rates by 75 basis points. Fed Chair Jerome Powell is expected to stress the Fed's resolve to curb inflation that's near a 40-year high. The Bank of Japan is trying to cap upward pressure on yields before a policy decision later this week. The central bank announced an unscheduled bond buying operation. BOJ Governor Haruhiko Kuroda has emphasized his determination to maintain rock bottom interest rates, even though many other developed nations are increasing them. British Prime Minister Liz Truss reportedly will cut the rates of stamp duty for home purchases. That's according to the Times of London. The newspaper says Truss will announce the measure Friday as part of a budget to stimulate the UK economy. Global news 24 hours a day on air and on Bloomberg Quick Take. I'm Lisa Mateo. This is Bloomberg.
price of anything goes up, the consequences reach far beyond what you'd expect. But perhaps most of all, when it comes to food. In 2010, surging food prices helped spark the Arab Spring. Lives were lost, regimes fell, and the consequences are still with us. Once again, food prices are rising, and fast. Energy costs, broken supply chains, and surging demand were just some of the factors that have driven food prices to their first record high since the Arab Spring. And that's all before a war between two of the world's biggest food producers. Ukraine is called the breadbasket of Europe, and taken with Russia, the two account for about a quarter of global wheat trade. They produce more than half of the world's sunflower seeds and oil, nearly 20% of the barley. Now throw in rising energy prices, and processing, transporting, even refrigerating food gets more expensive. Plus, fertilizer production is extremely energy intensive. Less fertilizer means lower crop yield, and prices rise even more. The pandemic revealed how complicated and fragile global trade systems are. Global agriculture, perhaps even more so. Unlike metals, for example, food goes bad. And crops take months to grow and are vulnerable to unpredictabilities like the weather. Rising food prices will be felt everywhere, but the poorest countries in the world will be hit the hardest. And as all these factors compound, the real fear is that record high will lead to record high, and ultimately to a global food crisis with vast consequence.
A lot's happening on Wall Street.
I think Jay Powell said things that were indefensible.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
We think that's the next secular shift.
From businesses most influential and instrumental.
It's knocking it out of the ballpark.
It's a challenging dynamic.
This is a level of uncertainty that we haven't had to deal with.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
When you've had your fill of IPOs, ETFs, and CPI,
Tune into the lineup for some NFL, NBA, and MLB. Did you retire too early? I mean, look at some of these payouts. I absolutely retired too early.
for the inside scoop on sports betting, catch the lineup right here on Bloomberg.
The markets are preparing to close, but the day is not over yet.
Stock that is now up about 45%.
A lot of volatility right now.
You need the power of the Bloomberg terminal to get you market-moving data before anyone else.
These numbers are much higher than expected.
Upgraded today to overweight.
You need top analysts to bring you exclusive global insight into cross-asset markets.
The muni bond market.
China is a really big focus.
Bitcoin ain't playing along today.
It's going to be short term.
Bloomberg Markets, The Close, weekdays on Bloomberg.
From New York City.
We're in London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
So recap the headlines.
You do not want to miss this story. How are you thinking about those dynamics?
Eyes are on the Fed.
The Fed has more work to do.
75 basis points seems to be baked in.
How quickly do they get to the terminal rate?
How long do they hold them there?
Chairman Powell's going to have to read the same speech twice.
Trust Bloomberg for the fastest coverage and exclusive analysis.
Is the consumer buoyant?
The dollar is a great place to hide.
The U.S. are going to overdo it. Investors just have to hold on to their hats.
With special commentary from former Fed Vice Chair Richard Clarida. Bloomberg Surveillance. The Fed decides. Today on Bloomberg, your global business authority.
Such sham votes, referendums, do not have any legitimacy, and therefore they don't change the nature of the conflict. This will only further worsen the situation, and therefore we need to provide more support to Ukraine.
That was Jens Stoltenberg, the NATO Secretary General, with Bloomberg's Anne-Marie Hordern. From New York City this morning. Good morning, Tom King, Lisa Abramowitz and Jonathan Ferro, counting you down to a Fed decision with equity futures just about positive, up 0.25% on the S&P, on the Nasdaq up 0.1%. Yields coming back from multi-year highs on a 10-year, down 2 basis points, 353.77. The dollar stronger, euro dollar, Tom, negative 0.5%, 99.25, as the Russian leader mobilizes even more troops.
Years ago, I was in the bottom of a hotel in Chicago with the laureate Thomas Schelling, the giant of game theory and war. And one of the 6 people we were with simply said to Dr. Schelling, "How do wars end? Nowhere like this morning does this matter." With us, Anne-Marie Hordern here on the game theory of Vladimir Putin. You have a wonderful history here based out of London of studying Russia. You went to Vladivostok, am I right on that?
And a few others.
Long ago. How do you respond as a journalist to these threats of nuclear war from Mr. Putin?
Well, I think he's just upping the ante yet once again. I mean, we've seen him do this already before, this threat of nuclear weapons, but clearly he is making this move as he sees Ukrainian forces make inroads in Ukraine. They were able to capture, I mean, we're talking about the size of Delaware, Rhode Island level of Kharkiv.
Yes.
Now he is going to have these sham referendums in Donetsk, Luhansk. This is the Donbass region he said he always wanted to have. And then Kherson and Zaporizhia, and that will connect him to Crimea. And by doing that, he is calling up reservists. And this is how he's making a play to the Russian people. And at the same time, telling the West, I am prepared to take it to that threat level that would make everyone incredibly uncomfortable.
Every single military expert I have spoken to says it's just a threat. He would never do anything short-term, medium-term, long-term nuclear issues. I'm not an expert on it. Every single guest says it's unthinkable. But we've been at that spot before, haven't we?
Right, and he's done the unthinkable, right? Not everyone also thought, including President Zelensky, that he would even make inroads into Ukraine the way he did. What I would say is, and this is on background from someone who really understands the Russian apparatus, had told me that the reason why he does not think Putin would ever go for the button on nuclear weapons is because he is not sure if his military would carry it out. And at that point, his reign would be over.
Anne-Marie, a lot of people are talking about the European response, the potential United States response, the potential for there to be, for example, jets sent over to Ukraine as a possible response to an escalation by Russia. How united have people seemed in your discussions at the UN General Assembly Council?
Well, at this moment, they're incredibly united. And what else can you say, right? Putin is having sham referendums, and then at the same point, he's telling all of the West to be on guard. Do not call my bluff. Those were his words last night. So what you have is the United States, the NATO Secretary General, all of these countries, Olaf Scholz, all of these leaders, especially on the having bilats this week alongside the UN General Assembly, having and this gives it almost a new impetus to have that fresh unity. That for all of this week going into this meeting, the big question was whether or not they are able to remain united going into the winter. This almost forces their hand to make sure they can make that case to their own economies and societies.
I'm looking right now at natural gas prices that ticked higher on the back of this news. You see Brent crude ticking higher on the back of this news. What's the case for why that is really happening, given that a lot of the bad news has already been accounted for and priced in?
Well, it's just more geopolitical risk. If there's a nuclear war, the markets obviously, this is something the markets are watching. They thought potentially at some point there could be peace negotiations, especially when you had Ukraine making up some of this territory in a very successful counteroffensive. So this is just going to add to the geopolitical risk. Also, we need to really unwrap what is going to happen this winter in Europe. And what we're hearing right now overnight, Germany has taken Uniper. They nationalized it. I spoke to the Qatar foreign minister yesterday. Scholz will be in Doha on Sunday. They are still trying to make sure they have enough natural gas to get them through this winter and obviously the following and the following winter.
AMH, just thinking about the president's address a little bit later this morning, do you expect him to address some of these issues?
100%. The president is really going to make his speech about something we've heard him talk about before, democracies versus autocracies. And he's going to talk about the, quote, naked aggression, according to his national security advisor, Jake Sullivan, briefing reporters yesterday, in terms of what Russia is doing in Ukraine. And here's something else the president is set to do. He's set to talk about the principles that work for all countries and that pushes back against aggressors who seek to threaten, coerce, and intimidate their neighbors or to violently attack them. He is likely going to call out Russia, which is on the Security Council, which makes you question, can the UN really do anything?
It's a very good point. Anne-Marie Hordern here in DC. AMH, thank you. For the UN General Assembly, this tweet just came in some moments ago from Horseshoe Loves on Twitter. Agree with your detest of the UNGA acronym and the doctrine to call mature institutions by their proper name. So you're going to stop calling Tom Keane TK now?
Oh, no, you can call me TK, John,
I think we run with
because...
TK. Are you a mature
I
institution?
was about to say.
No, but I'm an
That's
institution.
amazing.
My mother called me TK, so I frankly love it
She
when I
did?
hear TK. My mother called me TK. My father called me Hey You. John, team coverage in London, it was very important that all of us were steeled for what went on with the drama of the funeral, the mourning of a weekend line. And, frankly, I had to drill deeper into the culture of London, and so I migrated north. Amory Horton helping me out here on the move up. And oh, my word, it was team coverage from London.
That was your view, Tom.
That was my view here.
That's very cool.
And this is, John, explain the majesty of Mr. Son coming in and scoring 3 goals in like 13 minutes.
And that's how you get a player, Tom, to fight. You put them on the bench, and then you bring them off the bench, and they've got something to prove, and he had something to prove. And those first 2 goals of that hat-trick, Tom, were just absolutely awesome. Can you describe the moment, Tom, your first English Premier League football game?
I loved it. I teared up, except every bartender and cigar bar I went to, they were all Arsenal fans. I don't understand
Quite
that.
a game to go to, Tom, 6-2.
Yeah.
You complain about low-scoring games, and you've got a 6-2 game as your debut appearance.
Yeah, it was fascinating to see. I saw the VAR in action, which I still don't understand. I saw penalty shots stopped that was taken back and on. But what I really saw were the British people. It was stunning, John. When they sang "God Save the King," it was just lights out.
Go and say it. Best sport in the world.
Best sport in the world. Thank you to Tottenham and Mr. Levy. I really
Seriously?
appreciate that
You're like,
moment.
just repeat
absolutely
after
awesome.
me.
No,
Best sport in the world.
He's on board.
No, I'm on board.
He's on
Okay.
board.
Thank you, go Spurs. Thank you, Spurs. Thank you, Arsenal.
Now he's calling
Thank
them
you, Aston
Spurs.
Villa.
What the heck happened?
No, they're the tops. They'll always be the tops, but thank you, the Spurs.
Material samples brought back from objects in space can shed light on billions of years of our solar system's history, including details about the origin of life here on Earth.
A piece of an asteroid is a piece of the earliest beginnings of the solar system.
But picking up rocks from the surface of an asteroid or planetary satellite isn't as easy as it sounds. It requires voyages of millions of miles to bodies that have never been seen up close. Probes need to land on surfaces with weak gravitational pulls, where the surface terrain is completely unknown, gather samples, and then make the long trip back. And while behemoths like NASA and SpaceX grab headlines, it's a relatively young space agency. The Japan Aerospace Exploration Agency, better known as JAXA, that is taking the giant leap necessary to bring the mysteries of space back down to Earth.
young person who might like to have a career like yours, what would you recommend?
I think actually sometimes saying, you know what, I was wrong, you were right, is actually a more powerful show of intellectual strength than just sticking firmly by your position.
From the world of politics to the world of business. Balance of Power with David Weston. News, analysis, insight from and about politics power players. Weekdays. This is Bloomberg.
Live from New York City this morning. Good morning. It's the price action on this Fed decision day. Futures positive by 0.25% on the S&P. You're all familiar with the statistics of the Fed day decision price action. Bloomberg breaking them down for you. In the last 10 Fed decisions, 8 of them, this market has rallied, and you've seen some big moves so far this year. Are you going to push back against that view this time around? The Nasdaq positive by just 0.1%. In the bond market, massive changes at the front end of the yield curve on twos. Right now, 395.25 came very, very close to 4% in yesterday's session. We started the year at about 76 basis points. 12 months ago, the 2-year was at 21 basis points. We even started the month at about 349. We just keep adding more and more weight to the front end of the curve. It's been the theme so far of the year. The 10-year also, I think this is the 8th consecutive week that yields have been climbing, 353.77 on a 10-year. Yields come in just a couple of basis points. It hasn't just been the United States, though. I wanted to take a global snapshot of what's happened in the global bond market and look at core government bonds exclusively. We can take a look at a 10-year Treasury at more than 200 basis points year to date, a 10-year Bund. Remember, on a 10-year Bund, we started the year in negative territory. We're now plus 200 basis points to about 188. And Tom, you'll notice something that sticks out like a bit of a sore thumb for the BOJ.
Oh, this
Yields
is...
have barely moved on a 10-year JGB because they've kept that thing capped, Tom, at around 25 basis points.
We got to sit on this for radio right now. This is 3.5, Germany 1.9, Japan 0.3. And John, it really speaks to the impossibility Japan is in.
TK, can they keep sitting this out? Can they keep sitting this out as the pressure continues to build? And we've been exploring this in the last week or so. Right. What would happen if the BOJ abandoned that yield curve control story to the rest of that bond market board?
It's got to be played out through foreign exchange, and you're seeing it. And what hasn't happened here, folks, in the last 2 or 3 days is, again, yen has not gone 144.45. Right now, dollar yen 143.90.
Stabilizing in the 140s, Tom, is probably not what they are hoping for through the rest of this year.
Very good. We will continue here right now, and with the Federal Reserve coverage today, and look for us this afternoon. We're really ready for this with Michael McKee, of course, in the press conference. Peter Hooper joins us now to say he's global head of economic research at Deutsche Bank. Barely describes his contribution to economics and how he and David Folkerts-Landau have led in research in this crisis. I'm going to state, I may be wrong on this, they discussed recession first. Dr. Hooper, thank you so much for joining us today. I want to go to the Deutsche Bank reach, and particularly the work of Michael Spencer in Tokyo in the Pacific Rim that you people have done for decades and decades. And I just wonder simply, when I look at EM currency give way on this day of the Federal Reserve, for Chairman Powell, is he going to be overcome by events?
Chairman Powell has got one mission, that's to deal with inflation. This certainly is putting pressure on other countries. A strong dollar is adding to inflation pressures just about anywhere you look at this point. But that's not going to deflect Chair Powell on his mission. We're going to hear a hawkish message today. It's probably going to drive the dollar further.
Is it a hawkish message towards neutrality, or are we at an even general equilibrium? And today, do we become restrictive?
No, 75 basis points today is not yet going to put us in restrictive territory, given where inflation is, given how tight the labor market is. My colleague Matt Lazzetti did a great piece last week indicating why we need to get to close to 5%. You have to add not just the inflation picture, but the tightness of the labor market that Powell has been talking about as being central to this inflation problem. I mean, labor market, we see the NAIRU running above 5% in the 5.5% range, given all the various indicators you look at for tightness of the labor market. We're just way beyond norm on a lot of different metrics, not least of which is where wage inflation is now.
Peter, that call from Matt last week, we all read that piece, close to 5% on Fed funds. Let's dig into that. The pushback that I got when I put out that research on behalf of you guys, and a lot of people sent messages to Lisa, to myself, to Tom, and basically said, how on earth can we live with 4.5, never mind 5? What does the economy look like with 5% Fed funds?
The economy is going into recession here. We're not expecting it till the middle of next year, perhaps a little sooner. But that's part of the way you're going to have to ease up on this labor market. In order to ease up the labor market, you can't bring down vacancies by themselves. Historically, it's never happened. You're going to have to see the unemployment rate go up. It's going to have to get above 5% in order to deal with inflation, with the inflation problem we have here. So, financial conditions have not been helping out until we got to the reversal in the CPI for the August numbers. But we have further to go, and the Fed's going to have to push harder. It's going to have to get up into restrictive range, which we think is certainly 4% plus for right now.
Peter, it sounds like Deutsche Bank has been getting more bearish generally